Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. And from our studios in Las Vegas, Nevada, Mr. David Williams. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Monday, 22nd day of April, 2013. Quick look at the numbers. The Dow is down 49. The S&P is flat. Comp is up 11. Gold is up $27. Crude is up 42 cents a barrel. The chart up on the big screen is the S&P 500 E-mini futures. This is an hourly chart. If you only hear the sound of my voice and you cannot see the charts of which I speak, then you want to go to CFRN.net, homepage, any page, right-hand side of the page, great big microphone, click that. It'll take you to a page, follow the instructions. When you get there, click the big green button, which says Watch Live Now. You only have to register once per month. That's it. We'll all have to register again the 1st of May. And we'll be good to go all the way through until June. Then what happens is every day you get an email that says, hey, just a reminder, the radio show starts at noon. When you're ready to join the show, click here. Now, why is it important to join the show? Well, joining the show allows you to participate in the discussion. Not only are you able to see our charts, you're able to ask questions about the charts we have up, or a market that you're trading, or a stock that you're interested in, or maybe we're talking about politics, current events, world events, and you want to weigh in on the discussion. That's why you want to participate in the discussion and come into the live chart room. So again, homepage, CFRN.net, right-hand side, great big microphone. Click that. You're registered and good to go for an entire month. Well, this month is just about over. So you'll do it, and you'll do it again May 1st. Okay, we're going to talk in just a moment about everything that I have up on the screen, but first, our good word for the day. It comes from 2 Peter 2. But false prophets also arose among the people, just as there will also be false teachers among you who will secretly introduce destructive heresies, even denying the master who bought them, bringing swift destruction upon themselves. Many will follow their sensuality, and because of them, the way of the truth will be maligned, and in their greed, they will exploit you with false words. Their judgment from long ago is not idle, and their destruction is not asleep. I know, a little confusing. Let me see if I can break it down for you. Did you know that one of the signs of the return of Jesus is an increase in false prophets? Now, yes, there have been false prophets in every single generation since Jesus walked the earth, but look around. They're everywhere. If you live in Phoenix, go to channel 62 or 63 at 6:30 a.m. Pacific time. Good Lord, I've never seen such a mess. Now, let's just say they're everywhere, all right? Some of the false teachings are sprinkled with just enough truth that it's kind of hard to tell the difference. Now, this will aggravate some folks, I know, but please hear me out. I'm speaking of the health and wealth or the prosperity theology. Lots of preachers say that, you give to God in order to get. Now, that tickles the ear, but it's not really a biblical principle. It could, instead of being called health and wealth or prosperity theology, it could be called the gospel of greed. I give so I can get. No, Jesus didn't say it. He said it's better to give than to receive, period. There was a period at the end of that sentence. They hadn't invented punctuation back then, but he made a definitive statement. It's better to give than to receive, period. Now, what happens after you give, see, that's a whole other thing, and that should not be the motivation of your giving. But I digress. And, you know, you're told that if you pray hard enough, okay, that God will heal your disease. So what if God doesn't heal your disease, your infirmity, or the disease of a loved one? Does that mean you didn't pray hard enough, or you didn't live righteous enough, or you didn't fast enough, or your thoughts weren't clean enough? We hear that if we give money to this or that ministry, we'll get rich. It's this false idea that God will not let you suffer and wants you to be rich. That's the heresy, friends. It's not biblical. Tickles our ear, but it's not biblical. Other false prophets say now, don't think that I don't believe a Christian can get wealthy and do great things with that money. I'm the first to tell you, ministry costs money, and I do believe God wants you to be blessed. I just don't want to see the gospel twisted up like this. Other false prophets say that there are no absolute truths, that Christ is just a man, that the Bible is not true and always trustworthy. Backing up for a second, I certainly do believe that one touch of his hand and you can be healed. I believe that as well. Okay? How can you keep from being deceived by a false prophet or a false leader? Now, the key is in knowing what the Word actually says. And then ask these very important questions. There's just 3 of them. Would Jesus say that? Would Jesus do that? Is what this person saying consistent with the Word? If you're a Christian, you have an added bonus. The Holy Spirit that dwells in you teaches you how to understand the Word and gives you a check in your spirit when something doesn't ring true. You've been checked. You know you have. Question is what did you do about it? Did you consider it? Did you continue to sit under that teaching or preaching? Or did you get up and go? I'm not going to go into it today. I've told the story before. There's been an occasion where I stood up and walked out in the middle of a service. But again, I'm not going to go into that today. My spirit was checked so hard I could not sit there. But you got to be listening, okay? You got to be really listening, you know, with ears that hear, with the spirit ears. And make sure that you're listening to him. That's him with a capital H, and not to the prophets that are trying to tickle your ears with false teachings. For you see, even Christians can be deceived. And I encourage you, friend, don't let it happen to you. And that is our good word for the day. Okay, back to the chart up on the big screen. By the way, you can follow us on Twitter at twitter.com/CFRN. And if you want to take advantage of our free trial, go to cfrn.net/apply. Okay, I see Robin's out in the chat room, so she'll be with us today. Glad you're feeling better, Robin. Okay, guys, back on Friday at the end of the radio program, which would have been over here, right here. We put out a tweet, and we went into some detail about Simple and what Simple is. Simple is a trading methodology. It's a bit of an automated thing, but not really automated trading in the way that you would think of it normally. I went into detail Friday on the radio show, and so it's on the podcast. I also made a video over the weekend, and I posted that along with the podcast, so you can go out and you can listen to all the details. I'm not going to go into that today, but Simple's been in alpha for a year. We're hoping to bring it into beta here shortly. It will be beta tested by the CFRN partners. But Friday afternoon, Simple issued a signal to be long at 15.50.50. We were heading into the close, but I said, you know what? I'm going to go ahead and tweet it out, and I let everybody on the radio show know this isn't me. This is Simple. All right? We had a nice open last night, a little quiet, but then we took off to the upside, And the simple tweet brought us 7 points potential in the market. After it hit this 7 and left this tail hanging up here, I sent a tweet out and I said, well, first I sent a tweet that says, all right, guys, this is a simple tweet and not my tweet, so manage your risk aggressively. I then sent out a follow-up tweet after this tail appeared here, and I said, guys, there's still 4 points in this trade. If you've not taken your profits yet, give it some thought. So you had a shot at 7, and then you had an early warning to potentially consider 4, and then it ran back up to offer you almost the full 7 again. Okay? Everybody with me? And then it came back to what? And test that important area and run back to where? That's right, to the top of the range. So there was literally there's at least 2 good trades off of that 1550 area. The one initiating Friday afternoon into the weekend and into the Globex Open Sunday night. I sent out a tweet last night that also said to consider being short below 1549. And I put a little caveat with this one. I don't always do that. I said this is only a scalp unless proven otherwise. Look to take 3 to 4 points if triggered, if this trade is triggered. It did trigger at 1549, and it took us right down to a swing low of 42.75. But if you got in at 49, down to 44, that was a good, in the zone, 5 points. If you got out at 45, 4 points, okay? Oh yeah, today's only Monday. Whoops. Which reminds me, for the first time today, we'll see how this works out. We're recording not only the audio podcast as we normally do, but we're recording our first vodcast, which is a video podcast. And so far, I think it's working. We'll find out. We'll figure it out. Okay, what have I got for headlines? So that's where we are on the markets. We ran up. We ran down. When I cautioned folks to consider taking their profits last night on this tweet from Friday, I said it looks like there's some pretty good selling pressure overhead. Turns out there was. Pushed us all the way down to here. We've bounced back pretty good here. The housing numbers this morning were not as good as expected. That may have very well have played into it. No, a vodcast has nothing to do with vodka. That's pretty funny. Okay, just a couple of really quick headlines, and we'll go to Michael. In fact, I better just do the headlines and not the entire news article. Our government has cut air traffic spending, and now there are ridiculous delays. In case you need a reminder of how unfathomably, is that a word? Yeah. Lame this whole sequester thing is, look no further than what is happening today with our air traffic control system. Thanks to the unnecessary sequester spending cuts that our government supports, the Federal Aviation Administration is having to send air traffic control workers home with no pay. These furloughs, which resulted from the sudden need of the FAA to slash spending by 10%, kicked in on Sunday and is now causing airport delays. New York airports JFK and LaGuardia, for example, reported delays of more than an hour. So did Philadelphia. Now, the FAA has a $16 billion budget. How much money is this going to save? Out of $16 billion, $200 million. $200 million. It's going to save. You're going to stand around in an airport for hours on end, missing flights, to save $200 million out of a $16 billion budget. That's a problem. Okay. Online ad fraud may be topping $400 million a year. There are ghost sites, potentially 500 of them, that are bidding up real-time ad inventory exchanges. The ad impressions only exist because botnets are creating fake clicks within them, and this is according to Adweek. This is not just a conspiracy. RTB ad exchanges work like auctions. Whenever a web user arrives on a new page, the ad space on that page is offered for sale to multiple bidders in a split second. The user sees the ad from the winning bidder. Now, since Facebook is tying their forward-looking revenue to this metric, and if this metric, if there's as much fraud, there could be as much fraud here as there is in Medicare, or was in Medicare, and that's a lot. So stay tuned. We haven't heard all that we're going to hear from this. Stats show that Wall Street is busy buying up single-family homes. If you turn back the dial 3 years on this radio program, you heard us talking about that very thing, and we chronicled going out and buying a couple of condos in a gated community for $20,000 a piece. Those condos had previously sold for $100,000. We scooped them up for $20,000. Did they need some work, some tender loving care? You better believe it. But at the end of the day, was it a good investment? I think so. Now Wall Street's onto it. How bad will Apple's earnings be? Well, pretty bad. The stock has collapsed from a high of $702 to a recent low of $390 last week, and Wall Street is bracing for what most people expect will be a terrible quarterly earnings report. Apple's results in the December quarter disappointed many analysts, and the company's outlook for the first quarter was also meh. But after a steady flow of news reports suggesting that first quarter sales have not gone well as Apple's failure to release any new products this year, many on Wall Street think that Apple will miss even its low guidance for the quarter. Worse, many expect that Apple will slash the outlook for the June quarter below what Wall Street is currently expecting. In other words, Tuesday's earnings report is expected to be, that's tomorrow, a disaster. And if it is, folks, this is going to weigh heavy on the entire market. Basically, nobody wants to be the sucker left holding the bag on Apple. I don't think Apple's over. I don't think it's done with. One last quick thing. Over at the Bunny Studio blog, a $12 cell phone, that's right, $12 cell phone, purchased from the Ming Tong Digital Mall, was given a complete and relatively simple teardown to see what exactly goes into making such an inexpensive cell phone. Unlike the ultra-cheap handsets that are available through various carriers such as prepaid's Net10 and TracFone, the $12 cell phone, which has no name, is completely unbranded and unlocked. Now, it looks kind of like a toy. Maybe I'll put up a picture later in the show. It looks as if it came from a child's play set or a novelty store. However, it is a fully functional cell phone. It is not tied to any carrier, service, or store. The $12 price tag is for a single unit, not a bulk discount rate. If you buy them in bulk, you ready for this? $2. Word has it that the actual construction price of the cell phone is around $1, and this may change the way we buy and use phones. Now, this doesn't have all the fancy features that our smartphones have, but it makes phone calls quite well. Opening the cell phone was as easy as popping its plastic apart, yes, plastic, revealing a nearly connector-free board harboring a MediaTek MT6250 and Vanchip VC5276. That's it. That's the guts. That's what makes it tick. Bunny Studios said volume pricing is less than $2. There is a battery soldered to the board as well as a Bluetooth antenna. That's right, it has Bluetooth and a backlit keypad. While the teardown didn't entirely solve the mystery of why it's so cheap, it was an interesting look nonetheless, showing that in a perfect world with the right contacts, a simple cell phone without any planned subsidization, yeah, that is a real word, or other factors can be assembled for less than the cost of your last meal. So think about that the next time you're tempted to pay $600 for the new smartphone. And that's our news for the day. Michael, good afternoon.
Good afternoon, Dwayne.
I ran long. I can hear it in your voice. Oh, yeah. Good afternoon.
Now,
Come on, wake up. Snap two. Pop talk.
Come on. That's not long. Long. It's
Yeah.
like 12:45.
Yeah. Well, it's 24 minutes among friends. All right. Well, I'll let you take over the charts and the mic, or I'll ask you to, so that we can get busy with this recap. Correct me if I'm wrong. We had a good day in the live trading room.
We did. Another
Got our
good
2
day in the live
points.
trading room. Yes, we got our 2 points. Today I wasn't as accurate as I normally am because I was doing a lot of stuff today. It seemed like. So I'm not exactly sure where we got our 2 points, but when I realized we had 2 points, we were at 82 minutes. So that's what I'm putting on the spreadsheet. I know it was probably before then at some point, but that's when I realized it. So that's what I'm putting. Let's see. You guys should be looking at my charts, are you? Yes, you are, indeed. All right, let me slide this over here, and I'll hit record, and we can be on our way. All right, here we go.
Okay, I haven't figured out how to mute my setup that I'm working with today. So as I go to mute, guys, it's probably going to be a bumpy ride, so you might want to cover up your little ears, because I want to give you distraction-free environment. Okay?
Excellent.
Okay.
All right.
Excellent. Take it away.
All right, here we go. Today is Monday, the 22nd day of April, 2013. Let's see. You know what? I know how to mute, Dwayne, I think. Let me just figure out how to do this. Here we go. Ah, you called them. Okay, I see it. That worked. Whatever you just did worked. Sort of. Anyway. Today, the results in the live trading room were plus 13 on the Russell, we were plus 13 on crude oil, we were minus 4 on copper. We were actually better than that on copper. I did a bunch of trading pre-market. Actually, it was last night in the copper, and I was up 32 ticks. We lost 1 trade in copper for 8 ticks this morning, and then we won 1 trade in copper for 4 ticks this morning. So we were minus 4 in the morning in copper. Why copper, you might ask? I'll get to that. All right. Yeah, I know. Hang on a second. Let me just do something here. See if I can. Nope, that didn't do it. How about this one?
Muted.
There it was. Okay. If you have not taken a free trial with us, go to www.cfrn.net/apply. Sign up for the free trial. In the free trial, you get 5 business days in our live trading room, and you will be sent an email with instructions on how to download the charting platform, how to download the indicators, and how to get into the live trading room, how to apply the indicators, and all that sort of stuff. We really do want you to take the free trial when you sign up for it. Spend the time, take the time, get in the live trading room, do what you got to do to spend the time there and learn how to trade. Okay? Our goal is to teach you how to trade. You may learn how to do it in the live trading room in the first week, at least little bits and pieces of it, and then you can. It's a 3-month mentoring program that we offer, so you can hone your skills over the 3 months, and hopefully come out of that thing just making money day after day after day. All right. So to do that, go to www.cfrn.net/apply. Sign up for the free trial. All right. Let's see, our spreadsheet looks like this. As I said, this morning I wasn't really keeping track of what time it was when we made our 2 points. I realized at 82 minutes in that we had more than 2 points, but I wasn't really keeping track of it. So our results for the morning, we were plus 13 on crude oil. I'm sorry, plus 13 on the Russell. We were plus 13 on crude oil. We traded copper today. Now the reason that I traded copper is because I wanted to have another metal that we were trading, and gold has been really erratic lately. So I put gold aside, and we didn't trade gold at all today, but we traded copper. Okay. I was up on copper overall. I was up 32 ticks, which, copper's $12.50 a tick. And I was up 32 ticks, which was a reasonable amount. And then once the live trading room started, I lost my first trade in copper, and then I won my second trade in copper, and it made me a net of -4 ticks on copper, so -$50. Overall on the month, so far in April, we are plus $3,795 a contract, and that is in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 13, 14, 15 trading days, I believe. We are plus $3,795 a contract. We have taken 153 trades so far this month, so we're averaging about 10 trades a day. We have, if you assume $8 contract round turn, we are at a net profit of $2,571 a contract. All right. To get our 2 points, we got our 2 points every day except for one on the 10th of April. We ended the 10th of April positive, I believe, or were we break even? We're break even on that day. That's right, we're break even on that day. We ended the 10th of April break even, excluding commissions. If you throw in the commissions, we were minus on the day. But every other day we were positive, and that was it. Our last actual red day, our last down day, was February 7th. But we've had, so far this year, we've had 2 break-even days, 1 down day, and the rest of the days have been green. That's what we have. So if you wanna get in the live trading room, learn how we do it, then you just need to go to cfrn.net/apply, sign up for the free trial. If you've already taken the free trial and you want to become a partner, then just send us an email at support@cfrn.net, and we'll give you all the information you need. Okay. Now, let's go over the trades. Okay. Here we have crude oil. Now, I have 6 trades, it looks like I took on crude. My first trade was right here. I believe I got 1 tick profit on that trade. What we're looking for, a bearish cross of the MA1 below the BBC. Then price pulled back a little bit, like this, and we had to down close below that trend line with a little tiny bit of bearish divergence, and we had a lot of momentum on this. Now, because we had a lot of momentum, I moved my stop really quick to plus a tick, and I ended up getting out at plus a tick. The next one, we had a similar trade setup. In this case right here, we had more divergence. I had moved my stop to break even once we had 4 ticks profit in the trade, and once we closed on the other side of the MA1. Moved my stop to break even, it came back and took me out of break even. The next trade, another similar trade. There were some other ones in here that I had missed. Some nice trades in here that I had missed, but we had another one that was very similar to this, and I got short on that, and I took a little bit of profit on that. I think I took a couple ticks. The next one was on the other side. Everything changed directions. I missed this opportunity right in here, but I did get a hold of this one right here, and I think we took 10 ticks profit on that. I missed that one, I missed that one, I missed that one, I missed that one, I missed that one. And that was pretty much my morning. So we ended up plus 13 on the Russell. And I'm sorry, on crude oil. We ended up plus 13 on the Russell also, but on crude oil we ended up plus 13. All right, this is crude. The next market I'm going to show you is the Russell. Now, what I want you guys to take away from this is, well, here, let me minimize this. You see all these charts, all these different markets, they're all on the same time frame. They're all using the same indicators. They're all using the same exact trade setup. It's all the same across all these markets. Okay? It's all the same. So, let's move on to the Russell. Okay? On the Russell, here we go. I took a bunch of trades on the Russell today. Well, I say a bunch. I took 6 trades on the Russell. I didn't take 6 trades on crude. I took 6 trades on the Russell. Most of them were in the first 10 minutes. Took 4 of them in the first 10 minutes. The morning started out right here, and I jumped right in. I had this trade here wasn't a valid trade, and I ended up losing on it. I took it this morning as soon as we opened up. I took it, and I had drawn my trend line incorrectly. All right, I had drawn my trend line like this. You see how I cut off the edge of that bar right there? And I didn't realize I had done that, and it looked like we had the close up above the trend line here, so I jumped in, and as soon as I jumped in, I stopped out. And then Andrew said, "Hey, you drew your trend line wrong." And then I draw my trend line the right way, and I see, hey, you know what? Andrew's right. That was not a valid trade. So I lost on that first one. But it was followed up by this nice decline right here. And we're going right back to the same thing that I just showed you on the crude oil. The same exact trade setup over and over and over and over again. We drew a trend line here. We got to close down below the trend line with bearish divergence down here on the slingshot. Okay, we got short in there. We took some profit. We got short again here. I think we took a break even. We got short again here. We took some more profit. And we missed this one, or we skipped this one, really, because it was going into the weekly trading zone. There were a few more in here. We missed them. Right over here, there was a nice one on the short side. It changed directions. There was a nice one there on the long side. Another one here on the short. Another one here on the short. And we took profit on that one. All right. Now, wherever you see the yellow arrows on the price, those are trades we actually took. The ellipses are trades that set up that we missed. Okay? We just missed these trades for one reason or another. Usually it's because I was trading some other market. Now, right in here, Josh, I don't know if you're out there listening right now. Are you out there listening right now, Josh? I think you probably are. But I'm looking for you. Hang on a second. Yeah, you are. This is what you would email to me. Now over here you have your bullish cross. You tested the BBC. You're up close right here. So this is the spot to get long, right here on the up close. You see I have it highlighted already. You have bullish divergence, and the cycle is still blue. So right there is the spot to get long. If you didn't get long there, you had to wait until you had a higher swing, which was over here. Now you still had a blue cycle on the up close, so you can still get long right there. Now there's nothing wrong with taking 897.3 or 897.4 and holding on to it all the way up here to 899.1. That's $170 a contract, something like that. I don't know why you missed all these other ones on the way down. I don't know what happened there. But anyway, there was plenty of opportunity here on the Russell this morning. Right in here, you showed me this, and all the screenshots that you sent to me were a bunch of these things. And you should have been taking profit on these. Did you enter on this last one over here? Is this where you finally entered? I didn't see an entry over here. There was an up close way over here, but by then the black line's on the green line, so there's no entry over there because the black line got down to the green line. All right. It worked out. If you got long there, it still worked out for a point and a half, but it wasn't a consolidation. Anyway, I drew the consolidation box on there for you, and when it broke out of that, it dropped down pretty good, a couple of points, and then it turned around and went right back up to the weekly trading zone. But the trades that we took on the Russell are the highlighted ones. Okay, we went long in there. We missed all this. We missed all this. We took that one. We missed all that and that. And we took all these. Now, if you were focused on the Russell, there was ample opportunity to be up several $100s this morning on the Russell per contract. All right, probably more than that. It was there. The opportunity was there. Okay. Let's see. Gold. I didn't trade any gold this morning, so I'm not even going to look at gold. The NQ, we pointed out some things on the NQ. When I was going through the actual trade setups in the live trading room, we had a couple of things happen. Right in here is where I was looking at it. Price pulls up. It hits the BBC. It gives a down close. If the cycle is not red, if it's blue, then you need a close below the trend line. If the cycle were red, you could take the close off the BBC. But because the cycle was blue, you need to close below the trend line. Either way, it worked out. The one that I was showing to you during the live trading room, while the market was actually moving, was this one right here, though, where you got the close below the trend line, and you had a blue cycle, and the entry would have been right here. It would have stopped you out right away. Then it moved up, and there was no trade. It moved back down. There was no trade. It moved back up. There was no trade. It moved back down. There was no trade. The next actual trade was over here, right here on the NQ. It was right in there, a long trade. Okay. And if you missed that one, the follow-up was right there. Okay. We didn't trade the NQ at all this morning. We seldom do, as a matter of fact. But that's what you had. We didn't really look too much at the soybeans this morning. I'm jumping over to the soybeans now. We didn't look too much at the soybeans. It just didn't seem to be in sync this morning. In hindsight now, it looks like there were a couple of opportunities, but I wasn't paying any attention to it because I was busy enough with everything else. There were some trades here on the ES. We didn't take any, but there were some that showed up. On the short side here, early on, there was a short right in there, another one right in here. There was really no divergence to speak of right here. Not really any divergence to speak of. So you couldn't really take that short down into the weekly trading zone. Then you're in the zone, it got choppy. Get out of the zone, you could have gotten long right in here for the move up. If you missed that, then you're kind of stuck right now. But the thing worth noting is we went from zone to zone this morning in the live trading room. Zone to zone to zone, actually. We went from this weekly trading zone. Let me blow it up so you can see it a little better. Okay. We went from this weekly trading zone down to this weekly trading zone, and now we're back up to this weekly trading zone. Okay? That is what we had going on. Now, copper. I took 2 trades in copper in the live trading room this morning. One of them was right here, and I lost this trade. It stopped me out, and then it moved down. And another one was over here. I got short right in here, and I took 4 ticks profit on that one. The reason I put copper on is because gold has been too erratic to trade, and I wanted to have another metal to trade. Okay, I wanted to have a metal out there that we could trade. The margins on the gold went to 100%, which is like $7,500 a contract, which is more than some people can do. To be able to put on an order with a stop, you have to have about 15 grand in your account. And with the copper, it's about half that. So you can still trade with the copper, where you used to with gold right now, because margins are at 100% due to the volatility. You might not be able to, depending on your account size. Okay, so I decided to throw copper into the mix this morning, and the copper, you're doing the same exact things. I know there's an extra line in here. That, by the way, that extra line is the S1 cycle. That's what the extra line is. But I'll get into that in the partners meeting. I'll talk about that thing a little bit more. Okay, what I want to point out, though, let me just shut that off right now, so that oops, not that. Hang on a second. Anyway, we'll shut the S1 cycle off for just a minute, so we can look at the divergences. Bearish cross, test to the BBC, down close with bearish divergence. It's all the same stuff. It's just a different market. It's all the same stuff. Okay? You look for your divergences, you look for your bearish cross, your bullish cross, test to the BBC, bearish cross, test to the BBC, down close, bearish divergence, and the price goes down. It's all the same thing over and over and over again. Copper trades pretty well early in the morning. I'm going to get into that, Andrew, in the partners meeting. Okay, bullish cross here, test to the BBC with the up close, and up it goes. Doing all the same stuff. Okay. Now, I think that there is a lot more to it. I'm going to blow it up, and I'll show you guys. Last night, I was trading copper last night in here, right in this time frame in here last night. Okay. And it was working out really, really well. There's some things that I'm going to show to the partners in the partners meeting that I think would be helpful, associated with black line trades and things like that that are really only for partners. So you got to become a partner to get into the partners meeting to learn about that. But that's where I got 32 ticks last night, really in no time at all. And Frank had done something this morning that maybe he'll be willing to share in the partners meeting this week with the copper. And he was up, I don't know, what was it, 70-something ticks this morning? I don't know what it was. It was a whole bunch. Anyway, that said, we're going to wrap it up here, guys. If you have not taken the free trial with us, go to www.cfrn.net/apply. 77 ticks, $962.50. That's what Frank was up this morning on copper. Anyway, if you have not taken the free trial with us, go to www.cfrn.net/apply. Sign up for the free trial. If you have taken the free trial with us and you want to become a partner, send us an email at support@cfrn.net. Okay, support@cfrn.net. All right. With that, I am going to unmute Dwayne and
unmuted
up the recording. There we go. All right, Dwayne. The recording has stopped, and we are ready to go to Vegas. Okay. I think you got to turn your volume back up or something, Dwayne, because we can't hear you. Let's see. While we wait for all those technical things to come together, there is a long trade happening over here on crude oil right at the moment. If we get an up close on the current bar, the bar has a low of 99, so it's going to have a high of 809.3. This has got the full 4 ticks range in it. So how do you trade this? Well, you can wait for it to close up and then buy 89.03, or you could put a buy stop on at 89.04. Your decision. There, now Dwayne's back. I can hear him. I sort of heard him.
Were you looking for me?
Yeah, buddy. We're done. We're ready. We are ready.
Y'all ready for this? All right, let me take the charts back.
Okay.
And boom. Wait, is that right? No. This would be right, I think.
Yep, that's the one.
That's the one. All right. Tomorrow, guys, we have 2 very special guests. Douglas Rushkoff is going to be with us. He'll be with us at 1:45 Eastern. He has been an authority on the intersection of technology and culture since before the word Google was anything more than baby talk. He predicted the coming centrality of the Internet back in 1992. He coined the term viral media in 1994 and social currency in 1996. He forecast the collapse of the dot-com bubble at South by Southwest in 1997. And he also predicted the most recent recession in a 2004 column that later became his book, Life Incorporated. He even inspired today's code literacy movement, Program or Be Programmed. He's the author of a total of 12 bestsellers translated in over 30 languages, the host of 3 award-winning documentaries, an award-winning educator, and frequent media commentator. And tomorrow, perhaps his biggest honor to date, he will be a guest right here live on this humble radio program at CFRN.net. And he's got a book out, Present Shock. So you can Google him, Rushkoff, or go straight to his website, rushkoff.com. He's going to be with us tomorrow, 1:45 Eastern, give us a little, background on his life and his new book, Present Shock. Also tomorrow, look at this web address, crackpotcube.com. Go there, figure out what it is. This is a startup It is not being revealed to the general public until Thursday. It's probably going to show up on the Huffington Post in sort of a big way on Thursday. I was promised the first media interview way back in January, and I had kind of written it off. I just decided or was thinking that this was a startup that just was never going to actually get started. And out of the blue, I get a call today, and he goes, "Hey, it's me." And I'm like, "Oh, wow. How are you?" He said, "Look, I know it's been a while, but we've been working hard. We've been a lot of developments, but we are now ready to go public." And by public, I don't mean as a publicly traded company. I just mean they're going to start telling people what the Crackpot Cube is all about. It's a new way of communicating and advertising and a lot of interesting technology there. Will it fly? I don't know. But as the CFRN audience, you'll be the first to hear about it from the developer himself, Steve White. He's the guy who had the idea. He hired some developers and programmers to work with him. They've been working very hard for about the past year. I've known Steve since January. That's when I was introduced to him. So this is exciting. We get a first look at this new emerging technology, and then we'll see where it goes from here. Check it out, crackpotcube.com. Also, if you go out to our blog, CFRN.net, the navigation panel, click Emini Radio Blog, as you do, and then click View Recent Posts, as you do, and you'll see that on the very first post, the one I put up last night, that has Friday's podcast. It also has the video I spoke of that I had recorded this weekend, late Saturday night, sort of a slow, rambling kind of a video, as I do, where I walk you through all the setups from the previous week and the weekly zones and the tweets, and then I end up with a semi-complete dissertation on the concept of simple. Okay, there you go. Michael, you told them how to take a free trial.
Yes, I did.
You told them how to become a partner.
I did that.
There's nothing left for me to do but go to Vegas.
Let's head out there to Vegas.
Is that how you see it?
That's how I see it, yes.
All right, guys. Don't touch your radio dial. We're going to pause for a very brief station identification. We'll be right back with David Williams from PageTrader.com and Miss Robin Dane, the trading coach.
You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310.
But not as much as tomorrow. Good morning, Dwayne.
It's the man with the golden voice, Mr. David Williams. Welcome to the show.
Thank you very much. I was going to invite Michael Bork to sing that with me this morning, but I didn't get the time to get him in. I'm not sure if he would have joined me or not. Would you, Michael?
Singing that?
Yeah.
Not as much. Yeah, probably not.
This guy's been doing barbershop quartets since.
Not today, anyway.
Well, so how's everybody? How's everyone doing?
We is good.
Oh, that's good.
We is real good.
Oh, that's good. Well, that
How are you?
Good. We is good as well.
Okay.
We have a beautiful day here in Las Vegas. I don't want to take Robin's thunder, but is she online with us?
Hey, Robin Dane.
It's a great day here in Las Vegas.
Yay!
I'm hanging in there. It's a great day.
So
That
good
is
to have you
great.
back. I got official
Oh, it's
studio
so good to be
in
back.
here.
Oh, I can't tell you. I was down for the count. I had that can't talk thing, David. It was unbelievable.
Well, I had it too, and I still, as you can tell, I suppose I'm talking too much because my voice has not come back fully, but I had it, and it was a pretty good one.
Yeah, I never had it like that. It was really, really not good, and boy, it knocked me for a loop. But I'm back. The kid's back and ready to go again.
Well, you sound great. You sound great. So, hope you feel as good as you sound.
I'm getting there. I'm not quite there yet, but I'm probably 95%. I'm feeling pretty good. And it is a beautiful day here in Las Vegas today.
It is. It's very pretty. Dwayne, you must have a pretty day going out in Arizona there.
Yes, sir. It is. It's starting to warm up. Yesterday it hit 92. That felt a little warmish.
That's
but
a little warm,
based on what we have yet to come, then that's nothing. So it is beautiful.
I've been there. I've been there in the heat, and the day that I met you in person many years ago, even that day itself was a very hot day in Las Vegas. I remember that day being very, very hot, and just walking through a mall area, I remember with Jody thinking, you know, this is going to kill people. This is so hot. This is actually deadly, this kind of temperature. So yeah, you guys really get it. We get it here as well, but I think you guys even get a little bit more than we do. Typically, you get a little hotter than we do. So there you go. So you've got that summer to look forward to.
And I'm awfully glad this Boston thing came to a quick resolve. That was just horrible to watch. I'm sure you talked about it a lot. And
we did. You know, and looking back on last week, not a week soon to be forgotten. Not only was there the Boston Marathon tragedy, there was the West Texas tragedy with the fertilizer plant explosion that they still don't know, I don't think, really what happened there. And then over the weekend, this huge earthquake in China. And the fatality count, I think, is up to around 200 the last time I read a news article, but that was last night. I haven't checked on that today. Seems like there was some other big event that happened last week. Am I forgetting something, or is that enough?
That's probably enough.
Okay. All right. Fair enough.
You know, I've noticed that in places like India, for some reason, when anything goes wrong, whole swaths of humanity just get wiped out. You know, brick falls off table, 3,700 killed. You know, something like that. Just really large numbers of people get killed with very, very little very little apparent tragedy. But it might be because also the way that people live out there, or their homes and the construction and so on. But a little earthquake like what happened in China, if that were to have happened in India, you would see a tremendously larger number, unfortunately, of people that die. I don't know what it is about places like that, but small things happen and lots of people perish in small events. So I don't know why that is.
I don't know either.
Yeah, I've just noticed over the years that relatively small tragedies that happen in India and some of these other places really wipe out lots of people. So
well, they do have sheer numbers there too. I mean,
they do. They do have sheer numbers there.
This guy from Boston, the one who's still alive in his hospital bed. By the way, he can barely talk too. They think that might be from an attempt to take his own life as he was about to be captured. But one of the interviews that they're trying to piece together what in the world possessed him to do this horrific thing he did. And in one of the interviews, he made a comment. I've been here, and this was fairly recent. I've been here since I was 5 years. First he said, America's like a great place, a lot of opportunity. I've been here since I was 5 years old, and I don't have even one friend.
That was his brother.
Was that the brother that made that comment?
Yeah, that was the brother.
Okay. So from 5 to, how old was he, 29?
I'm not sure. 27, something like that?
27. Okay, so that's a long span of time to, not develop any friendships. Now, some of us are certainly more quick to make friends than others, and, some of us have more friends than they can count, and And some of us are a bit different in that we have a lot of acquaintances, but only a few people that we consider to be true friends. I guess it's all relative, but for anyone to say they have no friends after that many years, that speaks of some, I don't know, and how much did that play into his feeling of isolation or not fitting in? Perhaps when he made this trip back to Russia, he found someone there who made him feel as though he was valued as a human being and could potentially, well, see, they don't like you there, you've got no friends, but we can show you a way to attain, you know, great and everlasting fame. You know, that's that thing I talked about last week of someone with a, you know, kind of a blank slate having someone else filled with hatred writing that agenda for them. I don't know if, you know, we'll ever know, really. I guess to some degree it will always be speculation. Now, the younger brother, he may choose to tell a tale, and that's just it. We won't know, you know, how true that is. All we can do is accept whatever he says.
Well, he came to America originally and got scholarship. These were smart kids.
Yeah.
Americans paid for his education. Americans paid for, you know, the roads that he drove on and much of the services and things that he got. And even in the end here, Americans are repairing his broken body. You know,
that's true.
we're doing a lot of things for these
paying
people.
His legal fees.
Paying his legal fees. I mean, what aren't we doing?
And feeding him while he's in prison. And
Exactly. We have a lot to do.
One of the Twitter.
I think
Go ahead, Rob. Go ahead.
I'm sorry. I think the younger guy, you know, when watching this, appeared to be the lemming. You know, that his brother, he was, you know, they're very close-knit families, and so he was very close to his brother. I'm sure he idolized a big brother. His brother goes off and gets all this training, comes back and starts to pollute his mind when he was doing very well in school, the young one, and was very well liked, and there was really no indication from the friends that he had, and he had evidently some friends, and he was on the wrestling team, I think, the wrestling team, and so he had done very well. It seems like his brother came back, polluted his mind on whatever he learned over there, and then got him hoodwinked into doing this. And you know, it's a shame that it's a shame that somebody would think that this is the right thing to do. And I think his brother was lost, and his brother, you know, just was on a mission, and you know, let's see what you can do, kind of thing, prove to us. And he got trained well when he was over there by whoever, and came back. I'm amazed at how his father's in denial of the whole thing, that he was set up. That's absurd, but
It is. But there you are.
but belief is powerful. Belief, you know, belief in a particular thing can be very powerful, and it's a shame that they take these kids and use them for something like this when they, you know, their minds are fresh and they really can believe anything they want, but they go down this path.
The laziest thing you can do with your life is spend it hating other people. That's the laziest way to spend your time.
Well, that is absolutely the truth.
Well, Dwayne, any other important news you wanted to bring up? Or?
No, not that I can think of. Rob will be back Wednesday. Today he is traveling through the Smoky Mountains, and so his signal on his cell phone is a bit spotty. He'll be back Wednesday at 1 p.m. Eastern. We have 2 special guests tomorrow, so he will not be with us tomorrow. And other than that, David, I don't know of anything. Robin, we're just glad to have you back, glad that you're feeling better. It's also nice to see gold up $26, but we'll get into that. In fact, if you're ready, David, we can go straight to the markets.
Let's take a quick look around. I'd like to start where we normally do. Let's start with the S&P 500, the futures market, June futures. The S&P today is moving higher. We've got the early signs for a I think I may have mentioned this last week that we're looking for normally the week of April 22nd to mark a bottom. That's this week, and we'd like to see a new bottom. We'd like to see a new low, in other words, from below last week. We may not get that, but if we don't, and even if we do, I think in the end we're going to see that the market's still in a very strong position with substantially higher prices remaining possible. So how they handle this week for us is very important, because normally this would be a weekly bottom. The week of April 22nd would be a bottom. And it did so far. We're only on Monday right now, but it apparently came in 1 week early so far, and we'll see how the week goes. If we do break the 29 level, the 1529 level, I think it's a fait accompli that they would test the 15 and 1516 level that we've talked about, and in doing so, that would give us a much more normal bottom for the market, because what they've done so far is not really normal. It's very small and it's very compressed. As much as you might think it's a big move down, in the scale of what this market has done in the last 4 years, it's barely recordable. It's so small. So normally on a weekly chart we would see a larger decline than what we've seen, and so that's why our preference is to see a little bit lower prices this week. It's not a forecast for it, but that would be our preference. If we get that, it gives us a much better and easier way to enter the market for a multi-week advance. And so that's what we'd be looking for. That's our longer-term outlook for the S&P, which really hasn't changed much other than the fact of the week of April 22nd, which is very important in a number of markets. Also, today, this 55 level is selling territory, shorting territory up here, we think. I know we've pulled back from it a little bit here, but it's likely that the market's going to have difficulty getting through this level and on the day. And you know, there's a few levels above this, but intraday, I think this is an important level that we can keep our eye on and perhaps trade against for a move down. So, do you want to add a bit on the S&P here on your end?
Well,
or do you want me to?
we had a tweet Friday afternoon that took us into the Globex Open Sunday night, which was good for 7 points on the upside, and then we had a tweet this morning, which was good for 6 points on the downside. But what I noticed this weekend as I was compiling the weekly trading zones, and it's kind of interesting that I'd not noticed this previously, but the whole playing field shifted down. And I'm sure this has happened, you know, obviously it's happened week after week, but last night it was just the time that it kind of dawned on me, and I really saw it clearly that the whole field shifted down significantly. And so that, I think, gives me another little bit of information, something to think about, ponder on, and factor in, because that tells me that we most probably are looking at lower prices this week. So
well, it'll be interesting. I hope they do. I actually hope they do. We'll see.
All right. That's other than that, I've already covered everything that I've got on the S&P.
Okay. Let's move over. Let's move over to to the gold, and let's take a quick look around our markets that we look at. Stay with me just one moment here. We may be having a little. Are you hearing me okay, Dwayne?
You know, you seem to be breaking up a little bit, Dave.
Yeah, I think that's something on my end, and what I think I'm going to do is I may have to re-log back in, if you wouldn't mind having me disappear for a moment, or...
No, that's okay. Robin and I will chat for a minute. You go right ahead.
Okay, let me do that, because I'm seeing it on my end as well here. So
yeah, there's a little, it's fading in and out.
So, Robin, what's going on with you? Anything?
Well, trying to regroup, and I don't know if I told you, but Red Rock Search and Rescue received an award from the mayor, and they made April the 17th Red Rock Search and Rescue Day. They gave us a day. Isn't that nice?
Yeah. Oh,
I wasn't there, unfortunately, but I did see the pictures. They were great, and it was a great honor, and we're making a lot of headway with the federal government to open up to make special arrangements for people or organizations like ours to search national parks and areas. So we're not allowed to go into those areas, and because of the insurance. And so we're trying to get a bill passed in Congress that allows us to go into areas like that and not have the government obviously responsible.
Wait, hang on. You're telling me that if somebody gets lost in a national park, you guys are not allowed to go in and try to rescue them?
No.
Wow.
We're not allowed to go in. So,
well, who can? Who can go in?
The local, the local park rangers that are assigned to that particular park, or members of the government, but not an outside agency. And so what happens is, if a person goes missing after a certain time, the regular authorities don't have the wherewithal to continue for months and months and months. And outside agencies just are now allowed to pick up the slack and go in for them. So we're trying to get those kind of regulations changed, which is huge, very big, and it's all because of what we've been doing. So we've been working with Senator Hack and Congress. In fact, the woman whose brother's missing still from a homicide is going to speak before Congress next week. So we're very excited about that. So we get that changed, we'll be in great shape, and we've already made a huge contribution to search and rescue across the U.S. So we're very excited about that.
Now, where does your funding come from? Does it come from private donation?
It's all donation. All donation. When I did that NASCAR weekend, and there was we all volunteered to work this booth. The money that we raised that weekend, which is about $4,500, went to search and rescue, and that pays for our rent. So we do little events. We look for contributions, obviously.
Yeah.
Some of the people that have lost their loved ones and that we're still searching for have contributed to us, and we're constantly doing little things around to get the funding for it. But we all fund it, or we have to start we have to buy our own equipment. Equipment's not cheap. Ham radio is like $800, and backpacks and supplies, and every time we go out and do a search, it's man hours. They did a search not too long ago and had 85 people who were out there for 9-10 hours. That's if they had to pay for that outside, it would be hundreds of thousands of dollars already that we've contributed to the community. And we've made a real big contribution in 1 year. How far we've come is just amazing. It's just amazing. And we have orange shirts, or our official uniforms. We have official uniforms, and they're this bright orange.
Gotcha.
And in the beginning, I thought it wasn't very, very fashionistic to have these orange uniforms. But I'll tell you something. In a desert, when you've got people spread out as far as you can see, those orange shirts come in awful handy.
I bet.
So,
all right. Well, Dwayne, I'm back.
Good.
And I do have an orange shirt. Thank you for saying
Oh,
so.
good.
We saw you coming.
Okay, good. Yeah, from a distance. All right, let's take a look at. Let's take a quick look at gold. I think I can talk about this market because we've already given this out, and the majority of, or a good portion of what we were talking about happened. And for those of you who join our weekly meetings, you know about this setup. Last Friday, we had forecast that gold would, the June gold contract would continue its advance, and that it would test 1437 to 1440 into today, April 22nd, and that you could short it anywhere between 1437 to 1440 today, April 22nd. No waiting for any closes or anything. You could just directly short it. once those levels were reached. And those levels were reached today, and we've taken some positions off already with regard to that. We are expecting lower prices. Unfortunately, I can't give the target portion out yet because this is part of the subscription meetings and so on. But this portion of it has worked beautifully. The market's trading at 1422. I think most people that were in got out of their initial positions somewhere between 1427 and lower. So about $1,000 per contract, maybe a little more. And we are expecting lower prices into tomorrow, and we'll talk about this further. But perhaps if you are looking at this market and have a sell signal on your own, you might want to take advantage of that and maybe look for further decline. So that's basically our outlook on gold. And this actually is a semi kind of roadmap situation with gold in the position that it's in. First, it needed to go higher and test a very important level where it was very probable that it would fail. And so, of course, with the market moving down, we want to book something for our time and trouble. And then we have already placed our stop, and we're going to continue to hold and see if we can get to the targets that are more important leading into, for the remainder of the week and so on. So that's our position on gold right now. We talked about just longer term. Let's take a quick look at this as well. The longer term picture for gold, we think, is that it's down for a while, and that there is some probability that we will see a new low below the one that we've made recently in the third quarter of this year. So keep an eye on that. We've got plenty of time before all that happens, but we'll talk about that as we continue on. And then we think there probably would be a very powerful buy position. It's kind of funny because we were all talking about the idea of what would, I can't see what could possibly happen in the world right now that would make gold, really rally, because we're all used to, unfortunately, but we are, unfortunately only in as much that we've had to go sit through so many attempts at terrorism and the recent Boston and so on, that really of itself is not going to start a big, huge rally in gold. What would have to happen? How bad would the news have to be in order to get gold to really move? It's a little bit of a frightening thought because we're all pretty toughened up in our expectations and about what we see as normal life now, and so therefore the gold market's kind of toughened up a little bit too, and it needs, in order for it to feel the uncertainty that it would require to really rally, I think we would need, perhaps a frightening level of world events in order to really get it to go again. We'll see. Hopefully that won't be the case. It may end up putting in just a pure technical bottom and begin rallying off of that later in this year. But we'll continue to watch and talk about this as the weeks and the months go by here. So short term, we're bearish on it right now off of the 37 to 40 level that we talked about earlier. So we'll continue on. Let's go to the next market.
Let's hang on one second with gold. Guys, we talked about this at the beginning of the show. If you've been reading a lot of the articles over the weekend, everybody's talking about the big shakeout in gold and how those who were in paper gold, ETFs and whatnot, were shaken out of their position because of the margin factor. When you're in a highly leveraged position, a couple of down ticks in price can mean an awful lot as compared to those who are sitting with physical gold, be it coins or bullion or whatever the case might be. Those people tended to weather this sell-off a little better. People who were in paper gold, they did the prudent thing, most of them, and got out. And as each person gets out, that kind of compounds the issue and continues to drive the price down. One of the comments, I think I read it on Friday actually. I'm trying to remember who said it. It wasn't Rogers, it wasn't Sinclair, but he said the last guy has puked and we should go up from here.
Oh,
Now, that remains to be seen if that's true. This is a daily chart. Here's the swing low. Here's how far we've moved up from that swing low. If we continue down, we would, of course, look at that swing low as a potential target. And that swing low on the June contract was 1321.50. That's on a Globex chart. Now, below that, if you want to look at just Fib price extensions, 1290 is a possibility, 1255. Somebody just posted in the room that Goldman is calling now for 1390, and Deutsche Bank is looking for 1050. So we'll wait and see where it ends up, guys, but those are just some thoughts and ideas that perhaps we've, there's one side that says we're not done, and the other side says we're done. And we'll move on to the next market now.
all right. Let's take a quick look over. You said Goldman was looking for what price, Dwayne? I'm sorry.
Frank typed it in, 1390.
Well, that's very nearby where we are, isn't
Yeah.
that? That's a pretty short-term target. Okay, that's interesting.
Yep. So, David,
okay.
at what point, you told us you exited your gold position. What would it?
No. We're still in it. We only exited a small portion of it because the trade isn't over yet. The forecast was for a move up into April 22nd, up to 37 to 40. Short that for a move down, actually into tomorrow plus 1 day. So we're short. Still holding. We just wanted to book something, not the whole position, just a small portion, not even half of it. So, why? What were you saying?
Well, let me share this. This just in from Jim. This was originated over at Zero Hedge. China hasn't seen this gold rush in 20 years. As we noted last week, all around the world, the demand for physical precious metals has soared in the days following paper gold's price collapse. As the Financial Times reports, from Shanghai to Hong Kong to India, one dealer has noted older members who have been in the business for 50 years have never seen such a thing. The feverish buying has left many of Hong Kong's banks, jewelers, and even its gold exchange without enough gold to meet demand. Record volumes on Shanghai's exchange, lines outside of Beijing jewelry stores, and the proximity of Hindu festivals drove Indian physical demand and premiums higher as the world's two largest gold-buying nations prompted one exchange CEO to note that we haven't seen this kind of a gold rush in over 20 years. It would seem the concerted effort to collapse paper prices in London and New York has provided the rest of the world with a multi-decade buying opportunity.
So they're saying that, are they saying though in that the price of physical gold is dramatically higher than paper? Or are they saying that they're just seeing demand, but demand would normally mean price would advance, would it not? Or
well, yeah, people are lining up to buy gold, physical gold, because when paper gold collapsed, that pushed down the price of the physical metal as well. So now it gets into an affordable range in some people's eyes, and so they line up to stock up because they never thought.
People are just buying a pullback, is essentially. Is that right?
Basically, yeah, that's basically what that amounts to.
Okay.
And Jim types in, yes, physical is higher. He's going to give me some numbers here. Oh, and Jim, I wanted to share that little article you gave me back on Friday about congressional insider trading. I didn't get a chance to share that Friday, but I've still got it here on my desktop. Silver trading at a $5 premium over spot right now, according to Jim. And yes, Jim, I can see as you type it in. I know that's a little bit creepy. You misspelled spot. Just teasing. Yeah, silver trading at $5 premium over spot. Is that correct, Jim? All right, I don't want to freak you out because I can see what you're typing. Now, let me just real quick, let me give you what he had sent me on Friday, and I meant to cover it then. Here we go. If you recall the 60 Minutes expose of congressional insider trading from a year ago, Congress passed the Stock Act, which was supposed to prevent government officials from profiting from insider trading, a practice they had been doing for decades and for which us ordinary citizens would go to prison. Well, guess what? It's not even a year later, and Senator Harry Reid sponsored a bill exempting almost everyone of the government officials from the provisions of the act. It took 10 seconds for the bill to pass the Senate and 14 seconds to pass the House, and the White House signed it into law on April 15th. Amazing how fast Congress, and CON is highlighted in Congress, can act to exempt themselves from the laws the rest of us must obey. Jim, can you give me the name of that new bill that was sponsored by Harry Reid that was passed so quickly? If you can find that and type it in for me, I would appreciate it. Yes, he said he would. Okay. All right, so we can move on to the next market for now. That's kind of it. People, you know, around the world lining up, want to buy gold. They see it as a bargain at this price. And ultimately, that will drive the price of paper gold higher. But, you know, I've got a whole big argument about the paper gold thing. We won't even go there today. Lord knows people can go back to old podcasts and listen to us hash that thing out.
Right, and that, you know, those points are, I still think they're valid points, but I only think they really get to be a concern in the, you know, in the apocalypse. You know, when something really, really big wipes out, then that may come into play. It's like a final destination for things. You know, the difference between the argument is that the paper gold is really not gold, and it isn't. It just simply represents gold, and that it may not even represent gold because the people may not have purchased the right amount or any amount, having sold you paper that supposedly represents the gold. So if there's a run on it, ultimately in the end, if there's a crash, yeah. But, you know, crashes happen in everything, and at some point,
well, but that's not even the biggest. That's not even the biggest issue, really. Well, it is, but the issue that we deal with every day, you know, you don't need an apocalypse, is that the price of physical gold is being held back because people are buying the quote-unquote paper gold. And when
right, so
paper
buying
gold,
pressure's being relieved in the paper market.
Yeah, exactly. So, oh boy, I mean, there's a lot of people a lot smarter than me that, you know, their whole job every day is to go to the office and write columns and argue this point. So, I don't know.
Well,
I have to agree with them, and I've made my own case for that. Jim, whenever you get a chance, just forward that link over to me. But David, I know that we need to stay on track, so if you want to go to...
No, that's fine. Well, let's move on. The other market I wanted to talk about real quick was just the U.S. Treasury bond market, which is very closely allied to our interest rates. You know, the government wants to keep interest rates low, which hopefully allows people to continue to purchase homes, as an example. There is some talk in Congress, again, about lowering the bank's standards for people that want to purchase homes so that the little guy can participate in the housing rebound. That sounds strangely familiar to me.
That sounds oddly, yeah, creepily kind of familiar. Like, isn't that how we got in this mess?
Yeah, isn't that how we got here? And I suppose some of the arguments are as well, we certainly don't want to go to the extent that we went before. But in the end, I don't think it's a good idea to take somebody who really can't afford something and through some paper shenanigans make it appear to him and others that he can afford something, because in the end, if he really can't afford it, he's going to default on it. One way or the other, it's going to come. You can make it look as pretty as you want on the front end. It's like when you go to buy a car, you know how people say to you, don't worry about the cost, what are you looking to pay per month? And what you pay per month isn't what it costs. What you pay in total is what it costs. And you can either afford that or not. And one good rule of thumb is 28% of your monthly income, whether that's combined or individual. You know, banks will look at that as a general thing. They'd like to see your house payment, one of many factors, be at or below 28% of your monthly income. So, you know, if a person, you know, we're just throwing this out as a number, if a person made $4,000, you know, he netted, let's say he netted that, he had $4,000 at the end of the month, well, then he would have a house payment of $1,120 that the bank would be very comfortable loaning him money if other factors were there. But all these things, all of the whole business of loaning money to people is sort of the same thing that insurance companies do with actuary tables. They take in all this money and they know for a fact that a certain number of cars are going to get into accidents and that over time it works out a certain way just because they know the math and the percentages and how it all plays out. The banks know that as well with loans, but they try to keep it, their loan portfolio is high performing as they can. As you start to chip away at that in favor of the little guy or in favor of anybody, trying to help them out, what you're doing is you're chipping away at the ability for the bank to remain solvent, essentially, because they make money and provide themselves risk management by charging higher interest rates on less qualified people. As you start to flip those numbers around, or especially as in prior to the housing crash, you get to a point where you're loaning people who have no business owning. They don't have, they just can't afford it. I mean, it has nothing to do with class warfare. You just can't afford it. You know, I can't go out and buy $1 million Ferrari. You know, you just can't afford it, so you just don't do it. There are smaller homes, and there's other ways to live in a house, and et cetera. But in the end, I just hope we don't go back down that road. We will. They will want to under this administration. But isn't it funny that we're just starting to recover from the crash, and already we're hearing the cry from the left that we have to help the little guy, and what they mean by the little guy is, in many cases, a guy that really can't afford it. We need to change the system so that somebody who can't afford something looks like he can, and later, when he doesn't afford it, when he crashes and burns, then after that's over, we're going to, you know, start the program over again, just like they're doing now. Go ahead, Wayne.
Kevin, who is involved with banking and mortgages, he typed in, Kevin, if you can kind of elaborate on that a little bit, he typed in total monthly payments must be under 45% of income. Now, my question, Kevin, is, because here's the rule of thumb that I learned as a kid growing up, is that your rent or your mortgage, whichever it is, should not exceed 25% of your income. And I don't remember if that was supposed to be your take-home or your gross.
Yeah, whatever.
But Kevin is saying here, now Kevin, is that just the mortgage payment must be under 45%, or all of your monthly, you know, recurring bills? If you can clarify that for me.
It would be hard for me to believe, I mean, with all due respect, that to Kevin, that a bank would want you to sign up for a mortgage that is literally inching in on half of your total income. I think that would be.
Well, what he's saying is this is what Congress is pushing for.
Oh,
whoever is pushing this agenda.
Oh, I see. See, and that is a problem. That is going to be a problem. And here we go again. That's all I have to say. It's just idiocy is idiocy. It doesn't change. It just keeps doing the same thing over and over again. Somehow they want to have, you know, they just can't stand the fact that somebody has something that someone else might not be able to afford. They want to make everybody have the same as everybody else. And some people just can't afford things, you know. I'd love to go, I don't really want to, but I'd love to go out and buy a $10 million mansion, right? But I can't afford it. And there's many other ways to live, and people have been doing it for thousands of years. There's apartments, and there's condos, and there's townhomes, and there's rental, and there's co-op. I mean, the list goes on and on and on. And
I got some clarification here from both Kevin and Jim. Thanks, guys. All of your monthly payments, so that's 45%, including your mortgage, if I'm understanding this correctly. So, I mean, if you're going to allocate 25% of your income to the mortgage part, and then that only leaves, what, 20% for all your other bills, Well, now that doesn't sound so bad. I mean, that sounds kind of reasonable.
It sounds better, but one thing I will say is the banks are going to give a lot of resistance on this. Think of from their position. We'll get onto the markets, but just think about this. They just went through this. They still have tens and tens of thousands of foreclosed homes that they're trying to slowly feed out and feed into this market so they can recoup losses. And here comes the government along saying, well, now we'd like you to loosen up. They're going to say, hold on. I don't care what you want. I'm not going to lend A guy who can't, you're not going to bring me a guy who can't afford something and somehow flip it around so now it looks like he can when we know he can't. Period. That's it. We're just not going to do it. We're just not going to put our business at risk because of your, bleeding heart. I'm sorry. If you can't afford it, you can't afford it. That's it. See ya. That's it. But that's not how it's going to play out. They're going to try. And I'm telling you, the banks are going to give tremendous resistance to that. They're going to give tremendous resistance to that. Right now, if you have a credit score over 740, you can have anything you want, as long as it fits into some of the other guidelines. You can't just go out and buy a house that's 100% of your income. But 740 will do it if you have a credit score there. Many people don't have a good credit score because they crashed in their homes. Obviously, that's a problem. But
Kevin says that FHA allows up to 55%.
Yeah. Well, first of all, I want to say this. I'm not worried about the housing market crashing anytime soon again. So I'm quite comfortable that no matter what happens, we're not going to see another crash. But it concerns me, and it really almost is at the level of sheer amusement that here we are, not having even climbed halfway out of the, hundreds and hundreds of thousands of dollars worth of foreclosed homes. The market's rebounding, and here we already have the government stepping in again, wanting to twist and turn what has been known for years as good lending policy, flip it around so that it ultimately gives people something that they may not be able to afford and make it look like they afford it. And later, those people, if they can't afford it, will foreclose on those homes, etc. I want to help the little guy. I want everybody to have a shot. But there's some things that you just can't afford. And
I am the little guy.
Right. Well, you know what? I'd like to put myself in the same category that I just don't myself. I wouldn't want to get into something that I have to turn to my wife and say, well, we just can't afford this, honey, and now we have to move out. I mean, but when the government comes in and does these things, you put yourself into a position that that potentially is going to happen. So I'd keep my eye on for that. I think the banks are going to give a lot of resistance on that. They're not even halfway through this mess, and here we have the government already dictating to them what to do for the little guy. Didn't we just do a really bunch of stuff for the little guy, and look where we are? And can't we just get our books back in order? Can't we just get back on our feet? I know the banks are profitable in other areas and stuff, but they just went through tens and tens of thousands of foreclosures, hundreds of thousands of foreclosures. They're still coming in from the last time that we wanted everybody to. I told you, my mother had a house out here who a guy who had alcohol on his breath went in and got a no-doc loan for my mother's house for a large amount of money. I don't need to say the number. And I was astonished. He signed. He didn't have to have a job. He just signed a piece of paper saying he'd pay it back. That's where we had gotten to. And maybe the adjustment they make isn't so bad, but you know what's going to happen? This year, that's the adjustment. Next year, we'd like to tweak it a little bit more to help the, this disenfranchised group. And then one thing next, and before you know it, you've tweaked with all the well-known proper things to do with lending practices, and before you know it, you're inching back in on that. So having said all that, though, I do not believe the housing market is going to double bottom or any bottom. The bottom is in. I believe it's going to continue to move up. You're going to see $150 per square foot new home pricing. That means a 2,000 square foot home is going to be at $300,000 soon, and it's going to continue to move higher. I encourage people to purchase homes. I don't think the top is in, and I don't think you should worry about any little nominal fluctuations. It's actually almost cartoonish to me that the government would have the nerve to come out and start up with this whole practice all over again, even if it's in a small way. So,
well, where they should be applying the pressure is not to loosen any current restrictions on lending. What they need to do is they need to force the bank's hand and make them start lending money according to the current guidelines. That's where the pressure needs to be applied. They get paid a bonus every night for the money that they have on deposit. They get a percentage. If they were told, no longer are we going to bonus you for not loaning that money out, we're going to start penalizing you. You're going to pay a premium to keep that money. It's going to cost you. They would start lending it out. and the whole economy would really start to cook again, and we would see life. But they're not going to do that, and we're going to continue to struggle through this recovery until we have a new administration. Right. Now, Jim did clarify on the Stock Act, the bill introduced by Harry Reid. And for those who don't recall, the Stock Act was mandated that members of Congress post every related financial transaction to a secure website within 45 days. And while it's a stretch for us to feel anything resembling sympathy for our lovable leaders, we can understand why this would make any investor with access to inside information, public figure or not, a little bit uncomfortable. So it's not terribly surprising that a week ago our favorite Nevada Senator, Harry Reid, proposed modifying this provision to the Stock Act. The Stock Act will now somewhat apply to the President, the Vice President, and lawmakers, but it does not in any way apply to congressional aides and executive and judicial staffers. The reason for this, Reid claims, was to secure their personal financial information from cyber criminals. The surprising part really is just how quickly it garnered our legislators' seal of approval. 10 seconds in the Senate and 14 seconds in the House, while at the same time, a bit of irony that the Cyber Intelligence Sharing and Protection Act, a bill that allows private internet companies to share personal details about your online activity with the U.S. government, was widely disputed over privacy fears, but was sold as a way to prepare the U.S. against cyber attacks. It took how long for that to go through? Let's see, we find it ironic that CISPA, which was supposedly a measure to protect our country against cyber attacks, took more than a year to get through the House. Meanwhile, an act to allow Washington insiders to continue to line their pockets from illicit trading did not take even a day. So,
yeah, I just want to mention on that I remember the day I had the TV on, and it showed all these people in Congress applauding, you know, and smiling and nodding their heads when the bill was passed that didn't allow them to profit from, you know, basically insider trading, knowing bills that were going to be passed and things, and then go buy property along a freeway or whatever they were doing to, you know, have the kind of wealth that Harry Reid has. I remember them all applauding. And the funny thing is that they've all been profiting off of it. Seriously, every last one of them has been profiting off it. That's been one of the perks for so many years. And to see them all smiling in their suits, applauding that now finally, thank God there's a law that protects, you know, people from us doing that. Oh, fantastic. You know, what a world. What a circus. Anyway, in the end, with the bond market, I am expecting higher prices. We've been forecasting that there was a February bottom in bonds. They would move up to 149. We're still expecting that. I like the idea of what Dwayne said just a few minutes ago, that, you know, let's not change the credit requirements. Let's not loosen that up, because those are known to work, and that you have to rise to the occasion, and you rise to whatever occasion you can. But they can do other things to help the little guy other than monkey with the actuary tables that the whole business rests on. And the actuary tables are the loaning practices, and some banks are may take on a little more risk than others, but we're slowly going to inch our way back to a bad place. But having said that, again, I'm not concerned about the housing market. I think it's going to be very strong continuously for quite some time here. Now, having said that, 149 on the futures price, I think, is coming. The government is putting in $60 billion a month or something into the bond market. This is one way they're hoping to keep interest rates low by the bond market staying up. I really like the idea, if you think you can afford a home, a new home, smaller condo, apartment, townhome, whatever it is, to step into that. And I mean, you know, it's a big purchase. You have to have your own financial advisor. But if you you know, I'm telling you for what I think. I think the bottom is long in, and it's going to be in for a long, 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 long time. And that other financial tragedies that might happen along the way are only going to either keep the housing market propped up. And one last thing, for those of you who believe in the fundamentals and a little bit of the conspiracy, think of all the forces that are at work that want housing prices to stay high. Well, number one, the banks. The banks want housing prices to come back up because then the losses they take in foreclosures when they turn around and sell them are dramatically less. So they're not giving all the houses back out into the market that they have in inventory. They're feeding them out slowly. And this is a fact. This isn't my opinion. I know this. I see it. They're feeding them out slowly, and they're doing that to keep the demand up for these foreclosed properties that people can rush in and buy. And they have and then you have the government buying bonds. So what are the two biggest forces that people talk about conspiracies with? Banks and the government. Okay, some portion of the government. Well, you have both of those working in concert right now that both have a very strong interest cooperating together to keep housing prices up. That's what you have right now. If you want to believe in a conspiracy, believe in that conspiracy, because the banks are not going to allow housing prices to come back down now that they've had a foothold and now that they hold all the cards, which is all the foreclosed properties. In order for the market to sell, they have to release one of those properties, and they're feeding them out slowly, and the government is keeping the interest rates low. If you want to believe in that they, by buying the bond market, it's keeping interest rates low. Those are the two forces at work. They're not going to be thwarted easily. They have a very strong imperative and a very strong interest in keeping housing prices strong, firm, and moving higher. How you doing? I'll move on. Okay. You always laugh after I do that. I get that. I just do that for you, Dwayne.
So I'm guessing that you did not watch Friends when it was in prime time, but that you're now spending your evenings or afternoons watching the reruns? Because you've become Joey Tribbiani here of late with the
really?
How you doing?
Oh.
How close am I to the...
No, I don't watch Friends. I don't know where the How You Doing come from. I think it came from my daughter watching, there's a movie with, can't think of the guy, Eddie Murphy.
That's Joey Tribbiani's line from the TV show Friends.
Okay, but in one of it is also a line from Eddie Murphy in either the Frumps or whatever the name of the family was, where he dresses up as a woman, and every time he makes a point, a big, large woman, every time that makes the lady, him dressed up as a woman talking, makes a really strong point, she goes, "How you doing?" And so that's where.
I wonder which came first, the movie or the show. One of them is
probably the
riffing
show,
on the other. I don't know.
Exactly.
I don't know because I haven't seen the movie. So I didn't watch Friends in prime time, but I did watch it. Same thing with Seinfeld. When Seinfeld was like the big hit and everybody, Seinfeld, I was like, the masses are in love with it, so it's too good for this. I couldn't be bothered. But then afterwards I found out it was kind of an interesting show and funny. And the same with Friends. I never watched it in prime time, but then once it was off the air, I stumbled over the reruns and, found some, little funny spots in there.
Well, I'm the same way, with movies that were really well accepted and well loved, and then afterwards, I think, I don't want to watch it. And then finally, after everyone's through with it, I'll go watch it. Like Seed of Chucky. Okay, let's move on. That was one of the great ones. I think that's got to be one of the best all-time titles for a movie ever. Seed of Chucky. My God.
Oh, I don't think we mentioned that today is Earth Day, so happy Earth Day to everybody.
Thank you. Happy Earth Day to you, too.
I don't know what all that entails, but Google is commemorating it with a little special thing on their page. And I think it's a day that you're just supposed to appreciate the Earth and maybe clean up your act, pick up some paper. Robin, do you know?
Well, I mean, it's, how to recycle, and I mean, that's what I remember. When we were in New Hampshire, it was a big Earth. They used to go and make cupcakes and things that made it look like dirt and worms and things like that. And the kids would go over to the recycle place, and it's Earth Day. So, recycle, don't throw anything out of your car, don't set a fire, just protect the Earth.
Yeah. We've talked about this before and we've joked about it, but I have not seen a person litter in years, especially driving. I never, ever see somebody throw stuff out of their window. That has gone away. It's like, Fresca. It went away. I don't know where it is.
I got to tell you, it's funny that you say that, because just the other day I saw somebody throw something for the first time, and I had that awareness that
You hadn't seen it in a long
I
time.
hadn't seen anybody for a long time.
Listen, littering, it basically went away. It disappeared off the lexicon and the map here. People stopped littering. It just went away for many years. I wonder if that's true for the listeners as well.
It has gotten better. It has gotten better. There's no doubt. But there's a lot of trash out there. I mean, let me tell you, when you go out to the desert and you start walking that desert, you realize the trash that's out there. It's amazing.
Yeah.
The trash is out there. So it's still there, unfortunately, and people need to.
But I don't see people throwing Burger King boxes out of their hamburger containers out like in the old days.
Yeah.
I see very little of. I don't know that I can't even remember the last time I saw something you could really call littering. Because if I saw it at this point, I would actually say something. I say, dude, seriously. You got to be kidding me. You don't have a little trash bag in your car? You got to just throw it so all of us have to see your trash? I mean, really.
Yeah, we definitely have been conditioned. I actually remember as a kid how that was, you could just do it.
Right.
You would just, anything that you had, if you had trash in your car, you would just throw it out of the car.
Just throw it out. It was just
when we were at my last reflective wave seminar. I'm sorry, I do this sometimes just because people don't litter anymore. I was eating a banana and I had peeled it down and I had ate about half of it and I was pretty much through with it. And I said to a couple of the guys, I said, we're going to have to get back, get started on it. I just threw the banana onto the ground in front of people just because it was such a wrong thing to do.
Were you outside or inside?
Inside, in the building, just chuck it, just throw it right on the ground.
See,
go
outside,
right back
outside you can do that because it's a natural product. But
biodegradable.
No, I wouldn't throw a whole banana thing on the ground. You throw that in the trash. I mean, who needs to see that?
No, birds come and eat it. It's food.
Oh, yeah,
birds go back into the earth.
I know. It's food, but it shouldn't be just sitting there for people to slip on and look at.
Guys, I'm not one to frivolously send out video links, cat videos or any of that kind of stuff. The other night, I happened to be watching Jimmy Kimmel, which is, I don't normally watch Jimmy Kimmel. The news went off and it came on and I was stuck in my chair, my Barca lounger. I couldn't get up. And so I actually watched a little bit of it, ended up watching the whole show because I actually laughed out loud. And, a lot of the funny stuff on TV these days, it's funny in a cerebral kind of way, maybe, but not laugh out loud funny. And there was a video that he showed of a guy with a pair of nunchucks at the Food Lion, and I forget where. But I just put the link in the chat room after the show today. Guys, you've got to go watch that video and turn up the speakers so you can hear the commentary, because that's really the funny part. You will laugh out loud, I promise. If you don't laugh out loud, I want to see you in the office after the market's closed today, because there's something wrong.
Right.
You should be laughing. All right.
Oh, that is good. You should be laughing.
We need a good laugh. Laughing is good.
It is good. It's going to keep you very happy. Let's move over to the crude oil market. Crude is struggling to go higher. I have a general kind of outlook that, if there is a breakout from today's high, it's not a big deal, but I believe that crude would run at that point easily up to $90.05 or higher. It's not that far from it. Even breaking out from today's high, that's $89.45. But if you wanted to, you could use any kind of breakout system, actually. It doesn't have to be a particular kind, but anything where you believe that the move is on, it's obvious that it's on. I think there's at least $500 a contract in this for move up, and I would book something at or near the 90 level and hold the remainder for a trend-following exit to be determined at a later point. But as a starter move, getting a lead in the position, I think you could do that if you were of a mind to. So now they have not broken out yet, so I'm not saying to buy it now. Don't say, oh, if it's going to break out, I might as well buy it now. The people do that. Don't do that. It's only if they break out would you do that, and that would get you less money with more certainty, and that's how I roll. All right, so we'll move on past the crude oil here. A few other markets to talk about today, I think, of interest, and crude is always of interest. I don't have much to add on the Australian dollar. We'll continue to watch their new movement here. We do have something in silver. I can't give you the targets, but I will say this, that you could do a very similar kind of thing with silver, as I just discussed with crude, And I just out of the deference for the people that are subscribers and so on, I won't give you the target, but I think you can trade it up and follow it up with your, with a trend and stay with the trend if it does break out on the upside, leading into, from this point forward. That would be something on silver that you could consider.
Are you in
doing.
June silver?
Actually, yeah, I'm in May right now. I'm sorry. I'm in May right now, and this is still Mayable, meaning that it's still tradable in May, because May really doesn't go off. I talked to Bert earlier today until Friday. So
okay.
This is just an early week trade, and then that's the last of May that we're going to do. Then if we do get that, then I expect to be a top there for a multi-day decline. So, there's a trade up and down, I think. Okay, I know you've been hearing me hoot about this, but go check out Tesla, TSLA. They're doing pretty darn nice. How you doing? All right, we'll move on from that. It's an old argument.
Now it's turned into this thing that you can't stop doing it. You can't stop saying
I can't
that.
stop doing it.
He does it, but I like it. I like it.
Well, that's good.
I like it. I
Thanks.
like it. It makes him
Hey, we were just reminded here. Who in the world do I know in Detroit? Nobody. I was just reminded by Dwayne G. that Earth Day reminder. Earth Day co-founder Ira Einhorn brutally murdered his girlfriend, stuffed her in a trunk in his closet, fled the country, and was championed by leftists, celebrities, and human rights activists before he was finally brought to justice.
Well,
really?
I want to say
know
something
that.
to that. I want to say something to that because I appreciate the dryness by which he is presenting this. And a lot of people would say, well, he was, people let people off the hook all the time. It's like, yeah, he murdered his girlfriend. They'll still say something like, well, he was a complex man. Yeah, I guess so. He started the Earth movement and then murdered people. That's complexity for you. That's how you let people off. He was a very complex man. But no, the left doesn't care what you do, how many people you murder, as long as you do what they want for their social vision. It's okay. It doesn't matter. So how are you doing? I'm just joking. Okay, let's move on. No, I am. I'm only doing that now because I'm going to. All right.
All right, here's Tesla. I just brought Tesla up. There was a gap back a few days ago. Was that earnings or news or?
I think that was a combination. If you're looking on the weekly or the daily. I don't know what I think it looks like a daily. Maybe.
I'm looking at daily.
Yeah, they did well on their earnings. They're delivering cars. They sold more electric cars than any other electric car maker for last month, which is big. And I know you mentioned the jumbo shrimp thing, but would you call a person who trades $200, makes $200 gain last month? Maybe he's practicing, and this month he makes $500. Would you call that jumbo shrimp?
No.
Okay, well, that's my point. It's kind of like that with the electric car industry because they're small. It's a small market, and these percentages are percentages. It's a part of the whole. This market's not going to be a big part of the market for a long, long time, but it is interesting to see where they are going. And one thing I do want to mention is that, real quick, and then we'll move on to the next market because we have a couple other interesting things happening, is that there really is a tremendous amount, probably 10 really, really promising, incredible battery discoveries that are in process around the world. Many of them are at universities with young people working on these problems, solving, they have batteries on the laboratory table that can charge up to a full charge in seconds and have 10 times the density of power that our current batteries have, that weigh, 1/10 of the weight. Now, there's a lot of problems they still have to work through and so on to make them safe for the public and on and on. But it is just really amazing. Putting religion aside, really what can't man do? I'm really a believer on a certain level in the amazingness of man, in man's vision and what people are able to do when they put their mind to it.
No, we were created in the image of God, so
yeah. That's well said, and that's some people like to say, well, man is just evil, and and God is great. Well, man was created in the image of God, and we have these incredible capacities, one and another, to do various things. And look where we've come. Unfortunately, the more advanced we get, the more we want to blow each other up as well. So That's just part and parcel to the whole thing. Seems like.
Dwayne says that's the irony of Einhorn is that, he, along with founding Earth Day, he professed to be this great pacifist.
Yeah.
So, guys, well, when people tell you who they are and what they are, that's a lot of lip service. I don't have to tell you this. You already know this. You watch how a man lives, not what he says, because how he lives his life, that tells you, that's the true measure of the man. Okay? Not what you hear when he climbs into the pulpit or up on his soapbox. So
that's right.
Anyway.
Okay, so we'll move on now. Let's go over to the soybean market. I'm particularly happy about a particular setup we had in this. We gave out. For those of you who were at the meeting, you know about this trade. This is, again, July soybeans. We had forecast that the 19th of April would mark a very important top that people could sell short at $13.96. As soon as they get to $13.96, sell it short for a maximum of 40-cent decline. So that's the total trade. Rallies into the 19th, it touches $13.96, sell short for a 40-cent decline. Take a look at soybeans. They made a high of $14, 40-cent decline from the high, $14 and 4.04, and 40 cents below that is $13.60. Take a look at today's low, $13.58.5. Beautiful expression of this principle. This is basically a roadmap, and we got a nice gain out of this move. Now, if you ask me what soybeans is going to do now, I don't have a further forecast for it at this time, but how they complete this move will be important for us, and we may have a further one. And these are the kinds of setups and trades that you can either get in Messenger Pro. This one was in Messenger Pro, but we also give these out in our institutional meetings as well. Everything that we have, every other type of setup that you may want to see, and you're welcome to come and listen into those. Okay, so let's see. Finally, I think that may actually be everything. We do have a couple other setups, but they're right now, we're going to leave them off the table until we get through a little bit more setup with them. I think that's everything we have, Dwayne, for today. Soda, I know, I do have one other thing. Last week I talked on the program about Apple getting down to 385 to 386, and that I wanted to see that number reached, and today they got there. Today's low is 385.10. And the reason this is important is because this is the really, from once the market was really underway on the downside, this is really the number that would present itself as a possible place for this market to start to firm up on. So one suggestion would be do not buy Apple right now, but one suggestion would be to watch how the month closes with regard to 385, because the completion of this to us is important. It may be to you as well, for whoever you are and what you're watching. We think if they close the month above this in just a week from now, which closes April, that actually sets things up for the earliest sign for the beginning of a position in Apple. We're going to wait before we do anything with this, but I'm happy to see that the 385 we mentioned last week was completed, and you'll see they will have a bounce off of this, and we're going to judge that. We'll talk about that a little more as we...
Apple reports earnings tomorrow.
Yeah, and there is earnings. That's right. They have earnings. And people, listen, Johnny and I were talking about this earlier, people, what are people concerned about? The death of Steve Jobs, an absolute visionary genius who, no matter what you take from him, you may have read his book. He was a perfectionist, and he brought tremendous innovation to, I don't know how to do a eulogy on the man. I feel silly even trying, but his death concerned a lot of people, and some of the people that worked for the company no longer work there, and there is concern about the vision of the company for the product. We don't want them just to be an ordinary competitor to others. We want them to continue to innovate. And one of the fun things when he was alive was waiting to hear what next thing we didn't know we wanted that we would want as soon as he showed it to us, and that everyone would adopt as something that everyone must have. He would continuously show us these things that we must have. And then we said, yeah, you're right, I really want that. I can't wait to use it. So he's not there to do that anymore, and that fear, if you're thinking fundamentally, probably sent this stock lower. And we're getting to a point now where I think we can start thinking about levels to be buying at, and I want to watch 385. And one last thing I was going to say about soda, This is a stock that Robin Dane, the trading coach, has been watching.
Yeah, I was just trying to pull it up on my screen here. Go ahead.
Yeah,
There we go.
I was just going to
The
say,
daily chart.
we were talking months ago about, and anybody with Reflected Wave knows this, about the monthly top that came 1 month early in January of this year, and the market tested that high just this month in April, and will close below that high, and that normally precedes a further decline. So we're going to watch and see how this stock handles these levels here, and then
Good.
anything else. So go ahead, Wayne.
No, go ahead.
No, that's all I have. That's basically it.
Canoe wants to know if you have anything on the Euro 6E.
On the euro, let me take a quick look. We do have something on the euro. The dollar and the euro have shown somewhat unusual behavior in the last week. I think anybody who trades currencies would probably agree with that. And that type of behavior often precedes more important moves. So we do have a forecast on the euro. In general, we had been looking for lower prices into this week, and we've got some, but we're not a whole lot lower this week. But they're down just 2, but they were down earlier today. So I don't have a real outlook other than the fact that we were biased to the downside for early this week, and we'll see how the week goes. If we have something, I would be very happy to give it out if it's not something that we've already given out to the institutional and other subscribers and stuff like that. We're just being a little more careful with that. In general, what would I like to see? I'd like to see further weakness in spite of any little rallies, and a further decline this week and next. That's what I'd like to see in this market. So that's not a forecast directly, but that's what I'd like to see. Other than that, I do want to say this about the markets in general. We've had a number of sizable moves. We've had a number of unusual moves. I think we're going to see continued, very tradable movement in markets. If it's not the S&P, thankfully it's going to be 1, 2, or 3 other markets that are setting up to move. I'm sensing the pickup in volatility. I think you guys are as well. Everyone is. And I think there's something really to say about this is a good time to trade. If you're going to Dwayne's thing, this is a good time to learn to trade. If you're going out to our thing, our Reflected Wave, this is a good time to maybe add something to your trading skills. I think, honestly, this has nothing to do with the generating business. I just think at this point, with all of the stuff that's happened recently, I think we have volatility coming back in the markets, which means bigger moves, bigger swings, higher potential profitability in the markets. And so I'm kind of like, hey, this is interesting. I'm starting to feel a little bit of that old, excitement about coming into the office, because things really are moving. So we'll see if that plays out that way, but that's how I feel. That's what I think.
The volatility that has come back into the markets has been very nice, very welcomed. Two-sided action. This one candle back here, right here on Friday morning, I talked about this in a video over the weekend. The swing low was 39, and the swing high was 44. So in that hour, we had 5 points. In the following hour, we had a swing low of 43 and a swing high of 50. 7 points. This is the one I was really talking about in the video. This candle, 7 points. I mean, you don't have to wind the clock back too far to find days where we were happy to have a 7-point range the entire day session.
Yeah.
Now we're back to getting that in an hour. You get a 5-point bump to the upside, followed by a 7-point bump to the upside. Then you get a nice pullback. Okay, you're able to take an entry, and then this thing cruises into the close. I mean, or into the Globex Open Sunday night. Good stuff.
No, it is. It is good stuff, and we're seeing it in a number of markets. So I hereby proclaim, volatility is probably back. We're starting to see some kinds of movements and unusual movements and things that preclude that presage volatility and et cetera, et cetera. So anyway, so that's basically it. Thank you for the questions and other interaction with the audience. As always, trade with a stop and make sure that you manage the risk, because that's one of the great benefits of trading the markets is that you can manage the risk, where in many cases you just have to, in many other kinds of investments, you don't really have the ability to manage the risk like we do in the market. So it's not a punishment to have to place a stop. It's a benefit. It's an edge. It's something that helps you, not something that hurts you. So think of it in those ways. And
Robin, you got a quote for us?
Yep, I got a couple quotes. The category is "Don't complain or criticize." Oh, excuse me.
Bless you.
My goodness. If you have no will to change it, you have no will to criticize it. That's anonymous. It's better to light a candle than curse the darkness. Eleanor Roosevelt. And both tears and sweat are salty, but they render a different result. Tears will get you sympathy, and sweat will get you change. Jesse Jackson, which I never thought he would do something like that, but that's interesting. And I have one joke for the day related to our taxes and just having done the IRS. A nervous taxpayer was unhappily conversing with the IRS auditor who came to review his records. At one point, the auditor exclaimed, "We feel it is a great privilege to be allowed to live and work in the USA. As a citizen, you have the obligation to pay taxes, and we expect you to eagerly pay them with a smile." And the taxpayer said, "Thank God." He says, "I thought I was going to have to pay cash."
Oh.
That's good.
Okay,
All right, guys.
so that's
well,
it for today. And we do
Thank you
have
both.
Friday's
Yeah.
Coach's Corner.
Mhm.
Friday's Coach's Corner.
All right.
We have Friday's Coach's Corner, and we're doing the topic marriage and the market. And we
Okay.
talked about, not getting married to a particular position, and that's what the topic's about. So be there or be square, and we'll see you on Friday. But I will see you on Wednesday.
All right.
Wednesday.
Robin, we'll see you Wednesday. David, I'll see you tomorrow.
Thank you very much, you guys. Everybody, see you guys in the morning.
All right.
Thank you.
Take care.
Bye-bye.
Take care.
I didn't notice what time it was. All I know is that I fell in love with you. And if all my dreams come true, I'll be spending time with you. Every day's a new day in love with you.
All right, guys. That is going to pretty much wrap it up for us today. If you have any questions, go ahead and type them into the chat box. We are recording today for the very first time. We've been doing our podcast now, in other words, our daily radio broadcast. We've created an audio podcast for 7+ years. Today, we're recording both audio and video. We talked in the past about storage space and bandwidth and all these other issues. Well, so we're taking a step, all right? Taking a step. Now, I think I might have had one of the video settings wrong, so no guarantees on how this is an alpha test. Tomorrow will be a beta test. But it will be uploaded later today, and these videos, I'm going to house them. We have 2 YouTube channels, in case you didn't know. There's youtube.com/Emini Futures Trading. There's also, now, you know what? Let's go have a look. youtube.com, see that? /Emini Futures Trading. All one word. Now, this is where you're going to find the bulk of the public videos, okay? Once it goes there. Is it going? Going once, going twice? All right, we'll get there in a minute. When we get there, here it comes. This is where you'll find all the recap videos, a lot of the live trading videos that I've done, some of our training videos, the video that I did Saturday night. This is about an hour and a half, okay? And it covers all of the trade setups from last week. It covers last week's weekly trading zones. It covers the tweets, and it covers simple. I'll leave it at that. Go check it out. And then you can come down here and look at all the uploaded videos. It looks like we have a total of 415 That's 415 videos uploaded. A lot of those are recap videos, but interspersed, you'll find training videos, live trading room videos, and how to use indicator videos. So a lot of stuff. Go check it out. Now, the daily radio broadcast, I'm going to upload that over here. youtube.com/CFRN. Okay. And I think there's only 41 videos here. We haven't used this channel a lot. I've been kind of holding it back, but it's going to get plenty of use now because we'll continue to upload the audio podcast to iTunes. So you'll still be able to find us in the iTunes store. You'll still be able to subscribe to the podcast, absolutely free. And I encourage you to do that. And while you're in the iTunes store, by all means, leave us a review if you would be so kind. We very much appreciate that. Now, here's the difference between an audio podcast and a video vodcast. When you're driving, you can listen to the audio podcast, and it's a much smaller file size in case you're trying to download it and take it on the go. Video podcasts, don't play with that when you're driving because you might get distracted. You might want to look over and see what chart we're pointing at or what indicator we're talking about, and that could lead to something not good. So don't do that. Audio podcast when you're out and about, driving, standing in line at the grocery store, etc., waiting at the doctor's office or the DMV. When you're at your desk or sitting in your Barca lounger, if you want to watch the video, then that's fine. Okay, you'll still be able to find the audio podcast on our website on the blog, and I'm guessing you'll probably be able to find the video vodcast on our blog as well. I don't see any reason why I wouldn't put a link in both places just to make it convenient for you. And once I work out any bugs that I might have going on with the video recording, that will also become available in the iTunes store as well. Okay, so you'll be able to get the audio, and go ahead and subscribe to our podcast now in iTunes. And once we start making the video available in the iTunes store, then you'll already have it. You'll already be there waiting. Okay. All right, so that's how you get there. That's how you do that. Let's see if there's any questions in the chat box. What is your outlook on the S&P daily? Thanks. Well, we have a tweet out right now to consider being long the S&P up above, I believe it is 1560. Based on today's action, I probably suggest giving that a little bit of cushion. Maybe you push that out to 62, 63. Okay. But let's go look at a daily chart for a minute. Let's break that down. Is this the one I want? Hey, something happened to my chart. What the world? Oh, there we go. Scared me for a minute. Okay, now I know what that looks like. Okay, so we're at the middle of the channel. We talked about this the other day. This price channel, which we've been dealing with since back in November of last year. As we gapped into the new year, we've been walking the top of that price channel, and it just became a trend line. We got below it, we got back above it, and we continued to climb it and walk it. And every time we'd get away from it, we'd snap right back to it. Yeah, Ken, if you're going to use you need to use DT Pro. I don't know if you're listening to the broadcast or not, or if you're just typing into the chat app on the website. But just to clear the air, guys, if you take our free trial, our indicators, well, Michael and I are both TradeStation certified developers, and while we could code for any platform that exists, we have chosen to code our indicators for one platform and one platform alone. That platform is DT Pro. It's offered by our broker at Daniels Trading. There's a number of reasons we went with that platform. One, it works. It's very good. If you're a client at Daniels Trading, you pay nothing for data, nothing for charts. It's free. Now, I know a lot of you're sick and tired of those $300 bills every month from TradeStation. I don't blame you. Is TradeStation a good platform? It is. Nothing wrong with it. That's why we became certified developers, okay? Because it was a good platform, and we could do a lot of stuff with it. But those $300 bills every month for charts and data, that gets ugly after a while. And you have to pay the fee because there's no way in the world you're going to actually execute with them. You'll get killed if you try to execute with them. So where does that leave you? Well, luckily as a developer I get a reduced fee, so I still have access to the platform and charts, very reduced. They almost pay me to use it, but that's another story. Now, with DT Pro, not only does it work, not only are the charts and data and the platform, everything free for you as a client, but Bert and Leslie are there. They're a phone call away, 866-928-3310. They're not just brokers. They're not people in a phone room somewhere. They're traders. They've been trading the markets for years. So when you call in, toll-free, 866-928-3310 to talk to Bert and Leslie, you're not just talking to somebody with a badge that says broker on it. You're talking to somebody that's a trader that knows what it is to put on a trade, have little beads of sweat pop up on their forehead, you know, have your gut twist up in it. They know. They've been there, okay? They've seen the good, the bad, the ugly. They've seen the successful, the not so successful, and they know the traits of successful traders and the traits of not so successful traders. What an incredible bargain to have them in your corner watching over your shoulder as you put on and take off trades. And if you don't think that they'll call you and talk to you if they see you behaving recklessly, think again, because they will. Now, if you tell them to mind their own business, they will. They'll back off and let you self-destruct. But if you allow them, they will help you. They will guide you. They will direct you. They will answer your questions. Bert even comes into the live trading room every morning as much as time allows between phone calls, and he even helps us spot trades. And if you're one of his clients, he'll work that closely with you. You're not going to get that anywhere else. Let me ask you a question. Has your broker ever come and hung out with you in a live trading room environment and helped you spot trading opportunities in the market? I don't think so, okay? But Bert and Leslie, they do that. Okay, and so the question just became, well, what if I take the free trial and download the platform, but I want to stay with my current broker after the free trial? You will need to open an account, or you can pay, there's the P word, you can pay $75 per month to lease the platform. So that's your option. Once you go through the free trial, if you decide you want to become a CFRN partner, but you don't want to move your account over and have access to Bert and Leslie and all that that entails, you know, the competitive commissions, all that good stuff. You don't want any of that. That's okay. A lot, you know, we have a few partners who they've been with their broker a while. They actually do have a relationship with their broker, and they just really, sometimes you just don't even want to go through the hassle of filling out all the paperwork again. That's okay. We've made arrangements for that. For $75, you have access to the platform that allows you to run the indicators, and you're good to go. And you can still execute wherever you want. You don't have to execute with Daniels Trading. We'd like to see you do that because it's free, but it's up to you. Jay asks, what was the website with the videos? Well, Jay, let me tell you, it is youtube.com/CFRN.net and youtube.com/Emini Futures Trading. youtube.com/CFRN. There's no net on the end. I just typed net in. It's just youtube.com/CFRN and youtube.com/Emini Futures Trading, all one word. The bulk of the videos, the most current videos, you're going to find those at the Emini Futures Trading YouTube channel. The daily radio broadcast, you'll start finding those on the CFRN channel. And if I'm not mistaken, on both channels, there's a link to pop you over to the other channel. And guys, do this. Go to your contact list on your email, all your contacts. Add support@CFRN.net to your contact list. Moving forward, every email you get from us about this radio program and anything that we do, partners, if it has to do with whatever, we're going to send everything from one address. We used to send things from partners@CFRN.net, info@CFRN.net, free trial at CFRN.net, live charts at CFRN. Okay, we're done. We're getting a little organized here, and we're doing it really to make sure you don't miss an important email. Spam filters are very voracious these days and overzealous for good reason. You know, I don't like spam. You don't like spam. And so these filters do the best job they can, even if it's in sort of a crude little manner, to protect you from what potentially could be spam. Now, if I manually send you something, that's one thing. But if I send it out to the group, that triggers some of the filters. But if you add support@CFRN.net to your contact list, and if we begin to send everything, whether it's manual or automated, from support@CFRN.net, guess what? It'll get into your inbox. You won't have to go look in your bulk folder, your promotions folder, your spam folder. You won't have to play hide and go seek with the email. It'll just be there, okay? So support@CFRN.net, add that to your email contact list. Also, if you're in the live radio program, if you're participating in the broadcast, please use the chat application inside of GoToWebinar. If you use the chat application on the website, there's a chance I might miss your question. Now, if you're not in the GoToWebinar setting, and Jim, I know this applies to you, if you're just listening to the audio stream, just the radio, not the charts, but just listening to the radio, then you feel free to go ahead and continue to use the external chat app that resides on the CFRN.net website, okay? All right. Let's see if there's any other questions. All right, Ken, I hope that helps. Back to the outlook on the S&P. Okay, really got sidetracked there. Sorry about that. You're welcome, Jay. Okay, we're back to the middle of this channel. The channel's 70 points wide. We got back to the middle. Let's go over here and let's use this chart. Oh, by the way, I'm going to tweet this out later. We're going to consider being long the euro above 130.60. You don't need to rush and do anything right now because we're only at 130.60. And that's subject to change until I tweet it, but while I've got it up on the screen, it's a basic idea for you in regards to the euro. Does that mean you could trade up to that or fade the trade as it's called? That's up to you, but I wouldn't recommend it. Let's switch this out to the ES. Let's see what we got on our hands. Okay. let's do this. Let's pull a fib from the swing low to the swing high. We had a 50% retracement from this low to this high to this pullback. Okay? Now, understand, I do not believe in fibs as a standalone trading methodology, even though I spent a very long amount of time studying it and trying to turn it into a silk purse. Just didn't happen. And so I don't want to make, if you've spent time and money learning the concepts of Fibonacci, then I don't want to make you feel bad, because I did the same thing. But everything you need to know about fibs, I can tell you in 20 minutes. You don't have to spend 2 years, okay, like I did. 20 minutes, it's all. It is what it is, and you need something else to confirm an entry, period, okay? Now, we had a 50% retracement, and now the market's trying to rally. Okay, where might that rally go to? Well, let's take a look. We'll just draw fibs in the opposite direction. We'll go, instead of from the swing low to the swing high, we'll go from the swing high to the swing low. We just hit a 38% retracement, closing in on 50, closing in on 62. So what that means is that all of this here, this is an area. The market could run into resistance anywhere along the way and then continue the downward path. If we take out this 62% retracement, which is at, looks like 1569. If we take out 69, and for me, I'm going to tell you the important numbers for CFRN partners on the upside, 70 and 71. If we break out above 71, then I would look for the market to go and challenge this most recent swing high at 93. Okay, so I'll say that again. If we trade above 71, I expect the market to attempt 93. Let's look at this another way. We're going to go from the swing low up to the swing high. We're going to take our fib extension tool. We're going to drag that over here to this swing low. And that's going to give us some Fibonacci projections on the upside. Okay, 1575. If we get all the way up to that swing high that I just talked about, that's up around 89, 90. The actual swing high is at 93. And then as we continue to climb, 16, hang on. Let me move this out of my way. You can't see it, but it's in my way. Okay. 1589 to 93, that becomes an area all across here. And then as we move up, 1603. And then way up there, 1647. Okay. Now the current tweet that we have out is to consider being long above 1560. And I think I'm going to go out and change that to 63. And once I change it to 63, if that triggers on the long side, that trade, I'm looking for it to be good for about 6 to 7 points if it triggers. Okay. Tabell says, I want to be connected to the broadcast. How do I do that? I'll show you. Hold on one second. You just go to the home page or any page at CFRN, click the big microphone. It takes you to this page. And then you just click the link on the page that says Watch Live Now, and it will take you there. Click Watch Live Now. And keep in mind, today's program is almost over. Okay, so we've got some targets on the upside. Let me run over them again. I just gave you my target, which is at 70, 71. Now, using Fibonacci extensions, we have 75, We have 89. We have 1603. And we have 1647. That's if we continue on the upside. What about if we start to break down? If we start to break down, if we run into a fib up here, let's look at that again. Okay. See, we're already at the 38. So now what that does is it reduces our square. We can make a smaller square from the 62 down to the top of that candle. Okay. Anywhere inside of this box that the market finds resistance, and look where the top of that box just so happens to be at the 62. It's at 69. Remember I said my upside target was 70? Not because it's a fib, for an entirely different reason. Let me say that again, for an entirely different reason. Okay? Now, whenever you have two completely different methodologies pointing at the same number, that's a number that deserves your full-on attention. Doesn't mean it's a slam dunk or a guarantee or a magic bullet or a holy grail. It just means it's worth paying attention to. So if we do get up to 1570, pay attention and keep in mind that that might be a number where the market turns down. I also said I want to see the market get to 63 before we get into that long position to attempt 70. So that means there's something that I find important around that 60 to 63 area. That's why I want to see price get above 63 before we get long for a run at 69.70. Now, I said 70 and I just said 69. That's, you know, I don't mind exiting a trade a point before we get to the appointed destination, because that guarantees you get out and get filled. Does that mean you leave a point on the table? Sure. Somebody famous said they made all their money by getting out early. I forget who that was, but you've probably heard it before. Okay. So watch this. This is on a daily now as it moves up. Now, if this number here, it's all very apparent on this daily, but if we go down to an hourly, maybe it's not quite as easy to see. And then if you drill down further to the 4-tick range, you lose all of that vantage. Now, am I saying there's something wrong with the 4-tick range? Not at all. This is where you can come to get your trigger to enter the trade so that you only have to risk 2 points against this bigger picture backdrop. In other words, we know that we're in an area here where we could potentially see the market sell off and go back to test this swing low. That's one of the possibilities. Well, how would we know that was happening? Because over here on the 4-tick range chart, we would get a short setup. What would that look like? There'd be a bearish cross up here. The cycle line would be red and laying flat across the bottom. The green line would be up here at the top. Okay. If you want to learn how that works, come hang out with us in the live trading room tomorrow. Just take the free trial. Okay. It really is free. Now, I had said I wanted to change that tweet that I have out there at 60. So let me just try to do that really quick. Consider adjusting target to go long up to 1563 as opposed to 1560 as previously mentioned. And mentioned has an I in it. Consider adjusting target to go long up to 1563 as opposed to 1560 as previously mentioned. Okay. All right, so the week so far, I mean, we had a 7-pointer. The market made 7 points available. I don't want anyone to ever misunderstand that when I say they're on a tweet. Our tweet doesn't make it available, and our tweet doesn't change the way the market trades it anyway. The market makes the points available. All a tweet does is point you in the right direction. Last night, the market made 7 points available off of our tweet. You know, again, we're just pointing the direction, that's all. And then this morning, 6 points down through 1549, okay? This number was given out Friday afternoon, and this number last night. And now this 60 that we're about to tap, okay, that went out last night too. But just a couple things that have happened today. I'd rather see a little bit of cushion and get up there to at least 63 up here before we get into a long trade that potentially could take us all the way up to 70. Now, here's what I also want you to think about. Price has moved almost in a straight line. I mean, it's not a straight line, but the swing low down here was 1542. We're just a couple points away from this being a 20-point move, okay? From the swing low to the swing high, 20 points. Now look at this thing. It wants to run. So what happens is a lot of people start piling in. This is a momentum move, man. Everybody wants to jump in and get along this thing before it gets away from them. It's part of why I pushed this entry out. This thing is going to collapse. If it's going to implode on itself, I don't want to be a part of it, okay? And when we could still be, because there's a lot of momentum in this move. Look at that thing push. This is an hourly candle. You don't usually see that kind of motion in an hourly candle. It's usually a little more quiet. We're gonna see what happens. We'll watch 63. But my point was this. Let's go over here to the daily chart. Let me throw on an average true range. Go to volatility, go to average true range, create new area, okay. The average true range right now on a daily chart is 21.6. See, today's the 22nd. If we go back to the 17th, where was it? It was at 20. So for a few days now, we've been right around 20 as average true range from stem to stern on the Globex 24-hour session. So what I want you to take into consideration is that we just ran from the swing low this morning to the current swing high. We just ran 20 points. Am I saying we can't go 30 or 40 or 50 points? Nope, not saying that at all. I'm saying the average true range of the last 14 days. When you use this tool, it has a default look-back period of 14 days. Okay? See this down here, window 14? You can change that to 7, to 21, to anything you want. You just come click in here, change it. Okay? Every platform I've ever used always defaults to 14. And so if I know all these people are looking at that same number, I'd rather be looking at that number than a different number, because I know that they're going to be making their buying and selling decisions off of that number. So, see, I don't want to know the secret. I want to know what everybody else knows. Think about what I said. I don't want to know the secret that only I know. I want to know what everybody else knows, because they're going to make buying and selling decisions based on what they know, not some secret that I hold back. And if they're going to base their buying and selling decisions off the group knowledge, the group mind, the hive mind, then it becomes somewhat easier for me to simply follow along. I don't want to be a leader in this. I don't want to attempt to be a leader in this marketplace. I don't want to blaze new trails. Wherever the herd's going, let me go for a few steps. That's all I need to make my day. Just let me travel a few steps with the herd, okay? This is a 20-point move from swing low to swing high so far. As long as I can capture a couple points some way, somehow along the way, I'm very happy, and I'll never cry over the 18 points that were left on the table. And I encourage you to get to that place yourself, okay? So there was a very simple question. What's your outlook on the S&P daily chart? You ask me a simple question, and it's guaranteed that I will, most days, turn it into a very complicated and complex answer. I just can't seem to stop myself. All right, any other questions? I promise I'll try to be brief. If not, we're going to wrap this up. I might come back and trade the last 30 minutes of the session. I don't know for sure. Don't count on it. If you're here and you're hanging out, then, oh no, you know what? Because I have some work to do, I'm actually going to need to, I may need to close the webinar down. Normally at the end of the webinar, at the end of the radio program, I leave the charts running for the benefit of those who don't have their own charts. But today, I might not be able to do it. You're welcome, Rick. Dan, I have no idea, to be honest. I was kind of, I'll tell you what our take on gold is that we remain bullish on gold long term. There may be pullbacks. We drew some price extensions. We gave out Goldman's target and Deutsche Bank's target. Goldman's looking for 1390. Deutsche Bank was looking for closer to 1,000. And even if both of those targets come to pass, we will remain long-term bullish on gold because we think gold is something different, something unique, and we think maybe it's just not all over yet. And those people lining up in China and lining up in India at the jewelry store and at the gold exchange and at the banks even, in the exchange, the other exchanges, maybe they're onto something. They're stocking up at the discounted prices. Hey, John, you're welcome. All right, guys, I guess if that's it, we really are going to close it down for today. Remember, we moved our tweet out to 63. Let's go ahead and put it up here. Tweet 1563. Now, if you already had an order sitting out there and you got triggered in at 60, let's see if, I know I put the tweet out before we hit 60, but some of you might have gotten, maybe you had an order hanging out there. Maybe you weren't listening to the radio program. Maybe you weren't monitoring your Twitter feed or your email. If you got triggered in, it spiked to 61. We've run 20 points today almost. I keep saying 20, but it's not quite 20 yet. The swing high is 61, and the swing low is 42.75. So call it 43. So that's 18 points. Maybe there is another couple points in there. I don't know. With that, let me thank you all very much for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.